specifically, because investors have been so threatened by this higher inflation and central banks globally trying to fight back on that.
Yeah, and Karim, I guess the worry is that even on a day where the markets are doing quite well, there's not that much conviction out there that they can go higher.
I would agree with that. I mean, even on when thinking about the inflation pressure that's building, we're seeing it in the numbers in Europe yesterday and today, and it has an impact on market pricing, looking at the rates markets in Europe, on how fast the ECB is expected to tighten. Although, you know, it's getting to a point where markets are probably a bit too hawkish relative to what we actually think will
Which means
happen.
what, Karim, that you're expecting a big correction?
So actually, no. When we think about European assets in the second half of the year, thinking about European rates markets and how much they're expecting the ECB to move, whilst the ECB is signaling an exit from negative rates pretty soon, once they exit, I think we could be looking at a dovish pivot. So a bit more volatility maybe in the near term, but as we go into the Q4 or well into H2, we might start to see a better environment for risk.
Now, here's also what the Fed Governor, Christopher Waller, had to say on central bank and central bank normalization. Have a listen.
I support tightening policy by another 50 basis points for several meetings. In particular, I am not taking 50 basis point hikes off the table until I see inflation coming down closer to our 2% target.
Ksenia, we're just hearing from a Federal Reserve governor there. Are we going to be in this holding pattern of, you know, the market's worried about inflation, looking at earnings, not worrying about inflation, buying the dip until something happens? And what is that something?
Well, markets are an interesting instrument because they're always looking ahead. So I think at this point, with the sell-off in equities that we've seen so far, with the S&P 500 flirting with bear market just a week ago, I think at this point the market has, for the most part, priced in the worst of the hawkish rhetoric. The next question is what's going to come next, right? And there the strategists are really divided. So we've got Wilson from Morgan Stanley saying that there could be more downside from here, and the S&P 500 could drop 30% from its peak in January because the Fed hawkish rhetoric continues and inflation is still high. At the same time, you've got the likes of JP Morgan and Citigroup saying that, yes, there is opportunities to buy right now, but for the most part, strategists are not so keen on the US market because it is so much more expensive than Europe and EM. So they're looking at these more developing areas of the market and also Europe, which is historically cheaper than the US.
Yeah, Karim, do you agree with that? I mean, the problem is that usually emerging markets and Europe are cheaper for a reason. So for Europe, it's the proximity to Russia. And then if you're an emerging market, you're tied to the dollar. If the dollar rallies, you could be in trouble. So where do you find a bargain right now?
Yeah, I mean, that's a great question, because when we look at the overall equity complex, especially developed equities, we have moderated our view. I mean, we were overweight, we're now neutral. But I do agree with Ksenia that we're getting to this point where markets and investors are asking, have markets priced in enough? You know, when we think about US inflation, we might have passed the peak now. Europe divides opinion more. The peak might still be ahead of us in terms of inflation, and that is a source of further volatility. So, you know, when you piece it together, I think there's still room to look at US stock markets in the second half of the year, especially with their quality tilt.
Karim, can I actually bring you to an inflation chart? So I think our Valerie put this together looking at, you know, the price pressures coming from inflation across the board. Of course, in Europe, if you break it down, partly that inflation surge was also to do with airlines. The concern, Karim, and there's two schools of thoughts. The ones that basically say, look, we've had peak or we've almost reached peak in inflation, but then at what point does this inflation also put, you know, a lot of pressure on consumer spending?
Yeah, and that's a great point. And it's something that we need to look at equity investing through the lens of. We need to think, when looking at equity sectors that we prefer, we need to think about the sectors where consumer inelasticity is highest, the sectors where resilience in margins, resilience in earnings, and in consumer trends is highest, because it is going to start impacting consumers. We are starting to see it come through in the data. We've seen it in the earning guidance, in the corporate earnings season that is wrapping wrapping up. So really, it keeps us focused on more defensively tilted sectors like healthcare and like consumer staples, which are more traditionally defensive, because this consumer theme is going to continue to be with us.
And Xenia, I guess, to the earnings point, I don't know whether that changes the direction of markets, but certainly it could be a big wake-up call on the kind of inflation, but also impact it has on supply chains.
Absolutely. But yeah, what's been interesting so far in the earnings season is that the first quarter numbers were actually surprisingly strong, especially in Europe. But in the US, they held up pretty well also. So actually, earnings have proven resilient to the whole economic slowdown fears. And I think a big factor there was that analysts actually cut their expectations quite early on in the year, right? We did have the, Russia invasion of Ukraine in late February, so they did have time to cut their expectations. So far, companies have been able to beat that, but let's see, what the cost pressures and supply crunch issues tell us, because second quarter numbers might be much more negative compared to the first quarter.
Yeah, Karim, would you again agree with that? And what's surprising to me, so we've just come back from Davos. First of all, no one really can get their head around the fact that there was no snow in Davos. But the other one, if you're a supply chain or, a manufacturer, you have a problem with this inflation because you don't know whether to pass on costs or not, right? So just the price elasticity, you're kind of feeling your way around. Is this being underestimated in future expectation for earnings?
I think it's starting to get reflected in earning expectations. That's why we've started to see, and I agree with Xenia, we've started to see those downgrades come through, especially in Europe. But I have to go back to it being a regional selectivity and sector selectivity theme, because we can't answer one answer for all, across the board. When you look at the US, for example, and you look at sectors like tech, some of the larger cap tech stocks, they are well placed in terms of having cash cushion. They are well placed in terms of being able to cushion some of that cost and not pass it fully to the consumer. But then when you look at some of the more cyclical sectors, especially like consumer cyclicals, it's a bit more difficult. Yeah. They're going to have to pass it.
All right, we'll see what happens. Then, of course, we have the Unilever story. Unilever up 7% as Nelson Peltz has been named non-executive director. So it does seem like traders like that. Now, thank you so much to our EMEA equities editor, Xenia Galuchko. Karim Shadid, investment strategist at BlackRock International, stays with us. We'll talk a little bit about ETPs next. Coming up, China's factory activity is also still contracting, but at a slower pace as tough lockdowns begin to ease. We have more on that story next, and this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to the Open, everyone. 14 minutes into the European trading day, and you can see we're still seeing a bit of pressure across the board with the Europe Stock 600 down 0.4%. Now, we are seeing a bit of fluctuation. Treasuries also selling off, crude oil jumping, and this is really adding to worries about how aggressive central banks need to be to deal with inflation, and they're concerned that it will hurt growth. Now, China's manufacturing PMI also shrank at a slower pace in May, suggesting the economic fallout from tough lockdowns may be coming to an end. Now, for more, we're joined by Bloomberg's Chief Asia Economics Correspondent, Enda Curran. Enda, always great to speak to you, so thank you so much for coming on. So what's the key takeaway from the data today?
Well, there were some positive signs, no doubt. Francine, new orders were stronger, new export orders were stronger, employment in the manufacturing sector ticking up. There was also signs that delivery times are getting shorter for manufacturers. That's crucial in terms of ironing out some of those supply chain nuggets. So clearly a better picture for manufacturing and services. But the PMI is just still below that key 50 level, which means it's still in contractionary territory. And though it does suggest that perhaps that sector now has hit the bottom or has bottomed out as the Shanghai reopening gets underway and as it looks like Beijing has dodged a lockdown, it also speaks to how far the recovery still has to go. I mean, we're still in contractionary territory. There's still a lot of headwinds, both domestically in China linked to the aggressive COVID-0 strategy, and of course externally now with global trade slowing down as well. So definitely a hint that the economy might have hit a bottom, but I still think there's a way to go yet.
Yeah, and our Valerie put together that wonderful chart looking at Chinese PMIs. I mean, the concern is also there's another story looking at Chinese banks overflowing with cash that nobody really wants because of confidence being crushed. So how do we know when the economy is over the worst?
Well, this is a really interesting thing, Francine. I mean, the authorities have put more money into pockets of the economy through the central bank or other channels, but clearly credit demand isn't there. We have seen that in, for example, the most recent official data that shows that there isn't a huge appetite for borrowing right now. And of course, the authorities are trying to put a floor under growth. They are taking steps around maybe tax rebates for smaller companies or taking measures to support property prices or encourage car buying, for example. But all of this really kind of hinges on confidence returning, and confidence can't return until there's a clear sense that China is well and truly pulling clear of the virus or is going to tweak its COVID-0 approach. And cases have collapsed there. There's no doubt that it looks like Beijing has escaped the lockdown, for example, but I don't think any consumer or producer can be fully confident that there won't be ongoing restrictions, a kind of a push-pull approach throughout the months ahead, given how transmissive the Omicron variant is. So, as I said to you earlier, signs perhaps that the economy has hit a bottom, but there's certainly a lot of uncertainties as to how China's COVID-0 strategy does play out from here.
Enda, thank you so much. Our Chief Asia Economics Correspondent, Enda Curran. Now joining us again, Karim Shadid, investment strategist at BlackRock. Karim, when you look first of all at China, how do you play China?
So thinking about China across equities and bonds, we're neutral on both areas. In China bonds, I think we're seeing still investors think of it as a source of income, especially when you look at the government bonds. I mean, the 10-year yield is no longer as trading at a discount to U.S. 10-year yields as it was before, and so that did impact some of the positioning from investors. But we're still seeing investors look at it as a source of portfolio diversification, given the low correlation relative to both EM bonds as well as DM bonds.
So does China have to be a longer-term play?
I think when you think about China on the longer term, those diversification qualities do come through more strongly, yes, in portfolios. And then on the near term, I think we heard from the APAC colleague. There is still some uncertainty about the zero COVID strategy. There's also uncertainty around the fiscal impulse and just how much will be delivered and whether it's enough.
Graham, talk to me a little bit about ETPs. So I love the fact that, we get you on for a number of reasons, but you really go through the nitty-gritty, like the outflows and what it gives us for market sentiment.
Yeah, there's so much to talk about in flow land at the moment because
flow land.
Flow land. Because when you look at what investors have been doing, looking at ETP flows, we have not seen a dash for cash, and that's really the key message. That despite the volatility in markets and in equities, and now obviously equities have had a better week in the past week, we have not seen a dash for cash. We've seen a slowdown in equity buying, although U.S. equities are coming back in May. They're having a strong month so far. And then when we dig down under the hood at the sector level, we are seeing more defensive tilts, but definitely not a dash for cash.
But is that surprising? So is it because they have conviction in the markets, or is it because actually there's no one else to put your money?
Well, that's a good question. I think we started the year, one thing I love to look at is the money market fund flows chart. On Bloomberg, I look at that index. And so if you look at the start of the year, the cash flows, so money market fund flows were already stubbornly high. So if you start the year with high cash positions, why would you put even more in cash when it's all about market timing? If you exit the market, it's very difficult to time back the re-entry. So I think a lot of investors realize this. We saw a lot of fast money selling equities, but in terms of its institutional money, it broadly stayed invested.
Great. If you were to be in cash, what currency do you use, given the volatility that we saw for dollar, the dollar rally, and everything else?
The dollar has definitely shown some safe haven bid year to date. I think there's still some qualities to that, especially when you consider the interest rate differentials. The dollar could, and the Fed view, the dollar could continue to be well bid, although we're starting to see some interesting pockets and some investors move into EM FX. So i.e., EM local debt exposures have started to come back a bit, going back to the flow picture because of that view that the dollar may have gone too far versus EM FX.
Thank you so much, Karim, with an eagle-eye view, of course, at the markets and fund flow land. Karim Shadid, their investment strategist at BlackRock. Now, coming up, Telecom Italia is seeking valuation of around 20 billion euros for its landline network. We'll take a look at some of the corporate stories in focus this morning. That's coming up next, and this is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Welcome back to the Open, everyone. 23 minutes into European trading day. We're seeing a bit of pressure on these European stock 600. Again, inflation going up. We saw the price of oil going up because of the oil embargo on Russian oil. And that is, again, putting traders in the back foot of saying, right, well, if central banks move too fast to curb inflation, will they hurt, world growth? Now, this is a picture for a lot of the movers, and there is quite a lot of M&A activity out there on this Tuesday morning. First of all, DSM will form a fragrance giant via the purchase of Swiss Firmenich, and you can see DSM almost gaining 10%. Unilever, this is a story of an activist investor, Nelson Peltz, who is known for reshaking things up in retail, named non-executive director. Traders also seem to like that. That's a stock price, Unilever gaining 7.3%. And then Reuters has a scoop on Credit Suisse weighing options to strengthen capital. Bit of pressure on that stock, down 2.8%. Now let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Telecom Italia is said to be seeking a valuation of around 20 billion euros for the landline network it plans to sell to a state lender and international funds. Bloomberg sources say the proceeds would allow the former phone monopoly to cut its multi-billion-dollar debt pile. On Sunday, Telecom Italia announced its plan to sell off the network, shifting control to the Italian state. PIMCO has emerged as a key player in a panel meeting on Tuesday that will decide whether Russian credit default swaps will pay out. SEC filings show PIMCO's income fund sold more than $100 million of the securities to banks, including Barclays and JP Morgan, in the first quarter. That added to almost $1 billion in bets on Russia via credit default swaps. US investor Todd Boehly has completed his $5.4 billion takeover of Chelsea Football Club. It ends almost 20 years of ownership under Russian billionaire Roman Abramovich, who was forced to sell under sanctions imposed over the war in Ukraine. The deal means that for the first time, more than half the teams in the English Premier League are now backed by American money. Taiwan-based iPhone maker Hon Hai expects supply chain disruptions to gradually clear up as Shanghai slowly opens to trade following months of COVID lockdowns. Hon Hai chairman Young Liu told shareholders the company is now more upbeat about its 2022 sales outlook than before. Hon Hai is Apple's biggest assembly partner. That's the Bloomberg Business Flash. Francine.
Laura, thanks so much. Laura Wright in London. Coming up, EU leaders agreed to pursue a partial ban on Russian oil. We'll look ahead to their meeting today and discuss inflation in the Eurozone. Our Maria today, of course, is on the ground. We'll have plenty more on that next. Markets putting a lot of pressure, or certainly trying to work through what higher inflation and the higher cost of oil means for how aggressive central banks will need to be to rein in inflation without derailing growth. So we're seeing a bit of pressure for the European stock 600, down 0.4%. In fact, technology stocks underpinning some of the gains in Europe, but worries about inflation underpinning everything else. This is Bloomberg.
The end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu ramai sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 juta tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to The Open, everyone. We are 30 minutes into European trading day, and here are your top stories. Embargo breakthrough. EU leaders agreed to ban most Russian oil, paving the way for fresh sanctions on Putin. While Brent jumps for the 9th straight day. Signs of daylight. China's economic contraction eases, signaling the worst of the lockdowns may be past. Mainland stocks climb. Plus, half-point hikes, while Fed Governor Chris Waller says he favors consecutive 50 basis point rate hikes until inflation comes down. So let's also take a look at which sectors are on the move the most. Of course, the pressure not only on technology stocks, where we saw the most moving. Now, I have energy and some of course, the consumer goods on the higher side, but real estate, travel, technology, financial services, construction, all on the way down between 1 and 1.2%. Now, the European Union leaders have come together to back a ban halting the imports of most Russian oil. It paves the way for a 6th package of sanctions to punish Russia and President Vladimir Putin for the invasion of Ukraine. Now, we heard from the Commission President Ursula von der Leyen on the measures.
The Council should now be able to finalize a ban on almost 90% of all Russian oil imports by the end of the year. This is an important step forward. The remaining 10% on these one, we will soon return to the issue.
Well, for more, we're joined now by our Europe correspondent Maria Tadeo and Jana Randau, our European economics reporter in Frankfurt. So thank you both for joining us. Maria, first of all, how significant is this agreement?
Well, Francine, you know, it is significant, and I would argue it's more significant than what we were expecting yesterday. There was a lot of negativity around this package being approved. Today we have a deal which the Europeans say immediately will reduce those seaborne imports by 2/3, and if Germany and Poland follow through on the pledge to stop using pipeline oil from Russia, by the end of the year you could get to 90%. So overall, when you look at the package, I would argue it's more meaningful than what we were expecting and briefed yesterday that we should expect on this deal. And in fact, I just spoke with the Belgian Prime Minister, who told me when you look at this package overall, oil has a very significant impact on Russia. So therefore, we should assess it, perhaps take a moment to breathe, and then talk about further sanctions down the road.
So, Maria, what else is dominating discussion at the summit? I mean, there's a lot of word on inflation. Then we'll go, you know, to the read across to Jan, of course, and what that means for the ECB.
Yeah, and Francine, it will be about the food crisis. There's a lot of leaders already seeing and suggesting today that this is a real concern. You talked about the inflationary pressure. You talk about the pressure on the European consumer, but this is also about avoiding a full-blown crisis on the food and agriculture by the end of the year. Remember, the Ukrainians, and by the way, President Zelensky took part in this meeting yesterday. They say there's right now 22 tons of grain that have been sequestered and blocked by the Russians, and they call on the Europeans to help unblock the flow of this grain to avoid, again, this food crisis that has a lot of people worried here, not just on the economic impact, but potentially the social unrest that could come from it.
Thank you so much. I'm Maria Tadeo there, of course, live from the European Commission, and she just caught up also with the Belgian Prime Minister. And I think Mr. Borrell was also saying that member states need to coordinate their defense. Let's now cross over to Jana Rando, our European economics reporter in Frankfurt. And Jana, if you're the ECB, you're looking at this, you're looking at the inflation number from Germany yesterday, you worry about France, and you're getting a whole lot more pressure on your monetary policy.
Absolutely. We saw inflation being stronger than expected in Spain yesterday, in Germany as well. Now Germany is looking at an inflation rate of nearly 9%, and that is definitely significant. The ECB President Christine Lagarde and her colleagues have said their response will be data dependent, and if you take that at face value, then certainly they will have a tough discussion ahead. The President has said they will use their June meeting to decide on ending asset purchases very early in July, and that a July liftoff later than in the month is in the cards, with negative rates ending in September. And some policymakers, of course, are pushing for faster action, and the data that we've seen over the past days will give them ammunition to argue their case.
So, Jana, what exactly are we expecting from the ECB? I guess that German inflation was a shocker. Then today we have euro area inflation, but given we have the breakdown of countries, it will just be higher than expected.
Inflation is likely to be higher than expected. We're getting data in just over 90 minutes. And then we'll see. What's probably more important for the ECB in its decision are the June projections, which will show how inflation will develop through 2024. And I've spoken to a few governing council members over the past days, and they said it's likely that the rate will be above 2%, which is the ECB's medium-term target, also in 2024. And that, of course, then gives them a good reason to really start normalizing policy and at least get to the neutral rate.
Jana, I mean, if you look at money markets, they're definitely wagering up 113 basis points of rate increases by year end, and that's up from last Friday. With every inflation print, will this just creep up what money markets are expecting?
Probably. I mean, the ECB has been very definite on where it sees policy going until the end of the third quarter. What's slightly uncertain is how that will continue in the fourth quarter toward the end of the year. There, the economic outlook will decide, and there's just so much uncertainty. We've seen a revision to French economic performance at the start of the year, so they posted a small contraction now. If that continues, if the Russian war, if supply chain problems continue to persist, then that will have an impact, and then we'll have to see. But for now, I think 4 hikes is what some policymakers would call perfectly appropriate.
Thank you so much, Jana Randau there, our European economics reporter in Frankfurt, and she always has huge breaking news, so always follow what Jana has to say on the terminal and on Twitter. Now, in the meantime, we're getting some breaking news also out of China. China cutting its purchase tax for some passenger vehicles by half. So we'll have plenty more, of course, on China. The other thing we're watching out for is some of the car makers. VW now in the green, Mercedes in the green. This all has to do with the green energy transition, the price of oil going up. So again, we're working our way through, and it was very interesting speaking to our markets live editor, Mark Cudmore, this morning. We did the 7 o'clock hour together, and he was saying, look, even when markets are on the rise, it's not with much conviction. And so that would be, I think, the name of the game for the next couple of weeks. Now, let's cross over to Maria Tadeo in Brussels with a great interview. She's speaking to the Latvian Prime Minister. Maria, take it away.
Yes, exactly, Francine. Let's go straight with him, who's joining us here, of course, Latvian Prime Minister. Thank you so much for joining us. And you know, for your country, you have been incredibly outspoken on this Russian war in Ukraine, where you've said we have to go very tough, and a peace in Russia is not going to serve any purpose. It will only make it worse. When you look at the package that was agreed yesterday on this oil embargo, potentially partial embargo at the beginning, is this a step in the right direction? How much damage is it going to inflict on Russia?
It's absolutely a step in the right direction. This is the sixth sanction package, so week after week, as we adopt more sanctions, we're tightening and tightening the screws on Russia's economy. This is one of the biggest single steps. It will cut about 2/3 of Russian oil exports to the EU. We are Russia's biggest markets. Oil and gas are the biggest revenues for the state coffers that are funding the war. So this is a big step in the absolute right direction. The good news is 3 months after the start of the war, notwithstanding economic pressures that we feel as European nations, we're still united. We can still, without great difficulty, decide on the next sanction round, and we're putting ever more pressure on Putin's economy.
And you say it's 2/3, potentially even 90% of the Polish and the Germans agreed to also cut down those pipeline imports. I wonder, however, Viktor Orban and the Hungarians, they say this is a victory for their country. There's a lot of confusion in terms of what the exemptions are. How do you go about this?
Again, everyone is sort of spinning it maybe a little differently for their own home auditorium. But at the end of the day, each country has different infrastructure, and there is a challenge for countries which are landlocked. So my own country, we have numerous ports. We have options to import products from all over the world. It's not a difficulty. Other countries that are landlocked, that are fixed into a pipeline network that has been developed over many, many years, it's easy to say we should just get rid of that today. But in reality, sometimes it takes a little bit of time. So it's a small exemption that is on a timeline basis, with Poland and Germany already saying they're going to stop by the end of the year. That's about 6 months from now. So that will be about 90%, as you say. So we're moving absolutely in the right direction. The important thing is that we're all going in this direction. Also, Hungary has agreed to move in this direction. They simply argued because they're a landlocked country, and it actually does make sense to give them a little more time to get the infrastructure in place.
And help me understand the move or the mood behind closed doors, because the criticism, as you know very publicly, has been that Hungary in some ways facilitates the Russian narrative. I put that question yesterday to Viktor Orban. He told me all of this is fake news. I'm no one's puppet. Behind closed doors yesterday, what was the mood with Viktor Orban? Do you fear that this is going to become a problem?
No, actually, the move was very constructive from everyone. We did not have an argument. We actually had a rather technical debate on how we can do it. It wasn't whether we would do it or should we do it. It was how we can best do it. And everyone is in this together. There are no big arguments. The media likes to pick out, and sometimes some of us say things that give food for the media. But at the end of the day, we are united in Europe, and this is a big step in the right direction.
So constructive and Viktor Orban. But I want to ask you, of course, you've done coal now, you've done oil. The obvious question is now gas. I just asked your colleague Alexander De Croo, the Belgian Prime Minister, and he told me we need to take a pause because this is a huge impact that oil will have before we move into anything else. In your view, however, I understand that some of the Baltic countries are already pushing for what's next. When are we going to tackle gas?
Well, we've said from February 24th it should be a full energy embargo, oil, coal, and gas. We, before the war, were about 90% Russian gas dependent. We are no longer buying any gas from Russia. It is more expensive, but we're sourcing differently through LNG. We have the physical means to do this. For other countries, there are infrastructural issues, but I think that we should talk about the next step, and the next step, in my view, is obviously gas. It will be somewhat more difficult because gas is much more restricted in the way you can transport it. You can put oil in lorries and move it around easily. To move gas around, you need specialized equipment. You need to cool it, make it liquefy it, then regasify it. This is expensive infrastructure that if you don't have, well, you simply don't have. So we will have to build that out in Europe.
And sir, the fundamental question, and this is the core of the issue, is the war in Ukraine and what victory looks like. I hear a lot of Ukraine has to win, and they got to win. But I'm not sure, and I don't get a clear answer from leaders here of what victory actually means. What does it entail for you to see a Ukrainian victory? What is victory in your eyes?
Victory in my eyes is Volodymyr Zelensky saying, this is victory. I don't think it's up to us to tell the Ukrainians what is victory. And, you know,
even if it's a long war with a very heavy cost, if that's what it takes, that's it.
Look, the war will be as long as Russia continues to invade. The day that Russia decides that it's too expensive to invade, they're taking too many costs, they cannot win, the war will end quickly. So our mission must be to support Ukraine, support it militarily, support it financially, and support it through putting on these economic sanctions on Russia to diminish Russia's ability to wage war in Ukraine.
And just very briefly, final question. Chancellor Scholz was here. President Macron was also here. There has been some criticism that maybe these phone calls need to stop because they help perhaps the Russian narrative go out there and get a global impact. Was there perhaps any point of tension about let's just stop it with the phone calls? We need to see action first?
There was discussion about this as well. I also don't see the point of talking with someone who's committing genocide in a neighboring country. Putin will talk when he feels that he's losing, and so that should be our goal. But of course, the perception in various countries around Europe from the citizens is different. So in the Baltics, we have one perception. Perhaps in Germany or in Italy or in Spain or in Portugal, there's a somewhat different perception. And all leaders in the end are speaking to their electorate. The important thing is not maybe the details, but the fact that regardless of sometimes some things we say to the outside, we are all firmly united in our goal of supporting Ukraine and making sure Russia loses this war.
Well, sir, thank you so much. And of course, the Baltics have said maybe if the West had listened a little bit more, some of these issues could have been avoided. Well, thank you so much for your time. Always appreciated seeing you on Bloomberg TV. Thank you so much. Appreciate it. Francine, that was Latvia's Prime Minister joining us on Bloomberg. And you see here some of the cracks potentially about what happens next, where he says it's very clear that gas needs to be an issue, needs to be talked about.
Yeah, but then also very touching to see who are we to say when actually it's victory. It's up to, of course, President Zelensky and the Ukrainians to decide that. Maria, thank you so much. Maria Tadeo there in Brussels with the Latvian Prime Minister. Coming up, European banks stand to benefit after global regulators agree to start treating the euro area as one market in determining capital requirements for its top lenders. That's coming up next, and this is Bloomberg.
Stories about what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Welcome back to the Open, everyone. 48 minutes into the European trading day, and actually we're still seeing losses across the board. Just the FTSE holding strong, 0.2% higher. The European stocks down 0.4%. Now, the Basel Committee on Banking Supervision looks set to pass a rule change that would effectively treat the euro area's main lenders as one market. That could potentially facilitate cross-border consolidation in the sector. Well, according to documents seen by Bloomberg, banks' headquarters in the continent's banking union would see external European risks as domestic ones. Big European banks rose on the news. Now let's get more with our Bloomberg finance reporter, Marion Hoftefmeyer, out of Zurich. Marion, always great to speak to you. So exactly what is the significance of this Basel ruling?
Look, Francine, European Union banks have long complained that they compete on unfair playing grounds with the U.S. banks because of this higher capital surcharge. So what we're looking at here is two banks in particular in Europe are going to stand to benefit to this based on the calculation changes, and that's BNP Paribas and Deutsche Bank, two already pretty big heavyweights in investment banking in Europe. And secondly, as you rightly said, this could help maybe foster some dialogue around banking consolidation in Europe, which has been a long topic, and potentially help Europe create, a big enough bank that could really compete with the U.S. banks globally.
So there have also been, Marion, some reports that Credit Suisse is planning to raise capital. The stock down on the morning. So what's next for the bank?
Yeah, this is a tough year for Credit Suisse. Right now, the markets are not great for raising capital. So if they are actually looking at that, hopefully it's for later this year when markets turn around a little bit. But generally speaking, their capital ratios are fine right now. That could start to look a little tricky by the end of the year or next year if the trend of their performance continues on this sort of risky losses trend.
All right, Marion, thank you so much. Marion Hoftefmeyer there with some great reporting, of course, on the ground, looking at all of the Swiss and European banks. Now, coming up, the miracle green fuel that may actually make climate change worse. We talk hydrogen next. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost. So it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 53 minutes into the European trading day. Pressure on these European stocks, down 0.5%. The DAX actually accelerating some of the losses, 0.7% lower. The focus is, of course, on the extra embargo, oil embargo, the extra sanctions that the European Union will put on Russia. That's pushing the price of oil higher. That's giving investors cause of concern that inflation will go up, and therefore there could be a policy mistake from central banks. Now, it has been hailed as a miracle fuel that can power factories, buildings, ships, and also planes without prompting or pumping carbon dioxide into the air. But scientists are now warning that hydrogen carries many risks, including contributing to climate change. And that's the subject of today's Bloomberg Big Take. To tell us more about all of this is Bloomberg's Akshat Rathi. Akshat, thank you for joining us. I mean, is this a real concern, the fact that this fuel that we thought was a fuel of the future now could not be as green as initially thought?
Well, so the problem with gases in general is that they could become greenhouse gases, which is that they trap heat if they leak into the atmosphere. We know, for example, that methane, which is a major component of natural gas, when it's in the atmosphere, it captures ton for ton as much as 80 times the heat as carbon dioxide does in a 20-year period. What scientists are now warning is that hydrogen, which is a green fuel, you're right, it has a huge potential to be doing good in this world where we are beset by climate change, could also have indirect warming impacts, where its warming impact because of extending the life of methane in the atmosphere could be as much as 30 times worse than carbon dioxide. But the goal here, and the reason why we have this report out today, is that it's a warning to investors that if you're going to build hydrogen infrastructure, which there's tens of billions of dollars worth of money being put towards, make sure it does not leak.
So, Akshat, is there anything that can be done, in the next quarters to mitigate the problems with hydrogen?
So fortunately, we are not facing the problem right now. This is a warning. The point of this article is that as investors build this infrastructure, they ensure that there are no leaks. We know, for example, from oil and gas infrastructure, there is been a lot of methane that's been leaking, and that's causing havoc. And so we should try and avoid that with hydrogen. That's the main point.
Is that actually true with every new technology, that actually leaks are the worst, and we saw it with methane and everything like that?
Yes, I think with every technology, the technology tends to be a double-edged sword. It could do good if used in the proper way, and it could cause problems if not. And hydrogen's warning right now is exactly that, which is if in the building of this infrastructure, which will involve pipes, manufacturing facility, hydrogen boilers at home, we don't ensure that it doesn't leak, then we could be making the problem worse, not better.
Great. Thank you so much. Our Bloomberg's Akshat Rathi there from Bloomberg Green joining us on this wonderful Big Take. Now, that's it for the European Market Open. Surveillance Early Edition is up next. We look at the market moves. For the moment, European stocks down 0.5%. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We've been working very hard and successful with 5 sanction packages already. It's never been easy.
But maybe there is positive outcome of this. I know that there's a lot of work going on still.
Council should now be able to finalize a ban on almost 90% of all Russian oil imports by the end of the year.
First, there were sanctions that only hurt Russia, but now there are sanctions that also hurt European countries.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Tuesday, the 31st of May. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Embargo breakthrough. EU leaders agree to ban most Russian oil, paving the way for fresh sanctions on Putin. Brent jumps for the 9th straight day. Signs of daylight. China's economic contraction eases, signaling the worst of the lockdowns may be past, while mainland stocks climb. Plus, half-point hikes. The Fed Governor Chris Waller says he favors consecutive 50 basis point rate increases until inflation comes down. Now, let's check on the markets, and then we'll wrap all of this together. It's increasingly clear that the market is on the rise sometimes, but not with great conviction, because we saw that earlier this morning. Futures were pointing to higher start, and then European stocks now down some 0.5%. European technology down 1%. The concern is inflation. The concern is that with this extra sanctions package, of course, on Russia, oil creeping up, that means that inflation could, derail some of the growth plans if monetary policy tightens too quickly. Dollar, you can see 122.4, and then Bitcoin 31,576. Now, if you look at the European map, again, quite a lot of pressure across the board. I would suggest U.S. Treasuries is where there's quite a lot going on. Treasury yields actually jumping. I'm looking at the Bloomberg screen here on the iPad, and we're seeing a sell-off in German bunds and European bonds that started yesterday, filtering through today. Just the FTSE here in the UK gaining 0.2%. Now, European Union leaders have come together to back a ban halting the imports of most Russian oil. It paves the way for a 6th package of sanctions to punish Russia and President Vladimir Putin for the invasion of Ukraine. Now, we did hear from the Commission President Ursula von der Leyen on the measures.
Council should now be able to finalize a ban on almost 90% of all Russian oil imports by the end of the year. This is an important step forward. The remaining 10% on these one, we will soon return to the issue.
Now, for more, we're joined by our Europe correspondent, Maria Tadeo. So, Maria, this significant agreement, I mean, technically, will it go through without a hitch?
Well, Francine, that remains to be seen. But politically yesterday, what was achieved here, and of course there's always a perennial criticism that the European Union is very slow to react, that consensus is always very hard to achieve, but there is a deal nonetheless. And if you look at the technicalities, and again, they need to look into the fine print, and tomorrow more discussions are expected on the technical issues. But overall, if you take a 360 picture of this, what you see is that the seaborne oil ban on Russian exports would put an end to 2/3 of the purchases that the European Union makes. And if Germany and Poland, which are big buyers of oil through pipeline, also follow through their promise to end it this year, by the end of the year, you could see a 90% reduction. So the impact is big. And of course, we've talked a lot about Hungary and the impact that Viktor Orban had on this package. But ultimately, this is a political question. The Hungarian market is a small fraction of the market. So European officials believe that actually this will have a meaningful impact. And right now, Vladimir Putin is going to lose a big buyer, but also he has a problem. He needs to find new buyers who potentially will ask for a big discount. So yes, today, European officials believe that ultimately what was agreed here last night will actually be meaningful and perhaps take a big hit to the war chest of the Russian Federation on Ukraine.
So, Maria, the other thing, of course, dominating discussions is food inflation. What can these leaders come together and do?
Yeah, and this is a big concern, Francine. It really is. Yesterday, the Ukrainian president, Volodymyr Zelensky, he was on this call and he repeated and told European leaders again, you have to help me unblock the grain. Remember, according to the Ukrainian stats, they say that the Russians have essentially sequestered more than 22 billion tons of grain, and all of this is blocked, and ports that right now are under Russian control. And of course, also on a technical and logistical perspective, have been destroyed by the war. So this will feature heavily. There is a concern about the inflation pressure on this, the economic impact, but also, Francine, the social repercussions that this could have, particularly on the poorer nations of the world. So really, this is, I would argue, perhaps equally as important as the sanctions for European leaders today.
Yeah, we're talking about famine in certain countries, of course, in Northern Africa. Maria, thanks so much. Maria Tadeo, our Europe correspondent in Brussels. Now, let's bring in Mike Bell. He's global market strategist at JP Morgan Asset Management. Mike, always a delight to speak to you, so thank you so much for coming on. A lot of questions, actually, about conviction in the markets. There seems to be none even when they're going higher. What are the markets waiting for?
I think it's very hard to have conviction at the moment. And I mean, broadly speaking, we think it makes sense to be neutral on stocks and pretty neutral on bonds, actually. Because it's just so hard to know. And the news this morning, I think that just makes it even harder to have conviction because, of course, the big risk is that Russia could retaliate to these kind of measures, potentially by disrupting the gas flow to Europe. And that would have pretty grave economic consequences for Europe.
So, Mike, if you believe that the outlook remains very uncertain, what does it mean for, I mean, if you're neutral, are you kind of in a wait-and-see situation? And what needs to happen for you to get back in there forcefully?
Well, as I say, I think the biggest, I mean, as these sanctions get put in place, this is essentially ratcheting up the European economic response to the military conflict that's going on in Ukraine. So now we wait and see what Russia does about it. Are they just going to accept this, or are they going to retaliate? If you get retaliation, then I think, sadly, it becomes clear that the economic outlook is going to weaken quite significantly. So in some ways, the fact that these are being ratcheted up perhaps brings forward the point at where we get some more clarity as to how Russia retaliates to this risk that has been on the table ever since the war kicked off.
And when you talk about retaliation, this is a possible embargo on gas, or is it militarily? Like, what's the limit? I know we can't predict a full escalation of war, but as a strategist, like, what are the pros and cons of what can we foresee? I guess.
I still think that direct military conflict between Europe and Russia is a pretty low probability outcome. The risk in my mind is that Russia could retaliate by disrupting the gas flow.
Yeah.
And it's much, much harder for Europe to replace Russian gas than it is to replace the oil. And so that, to me, is the big risk out there, which would make me be careful about being overweight risk assets at the moment.
Mike, is there anything that looks attractive? The U.S., I guess, fairly contained because of the proximity to Russia, because it's much further away.
Yeah, and I think the US is less vulnerable to this shock because you've got much higher savings, we think, based on the data we've got. It looks like US consumers are still sat on about double the savings they had pre-pandemic. And of course, their natural gas prices are not going up as much. So we do think they're less exposed to the higher energy prices. However, the risk in the US is 30-year mortgage rates have gone up a lot. So you're starting to see that feed through into housing activity. At what level of mortgage rates does that start to slow the US economy? And we may not be that far from that point. So actually, when I look around the world and think, where is there a lot of bad news priced in? To me, it seems like China is the place where there's the most bad news priced in. Yeah. And it just seems to me that the COVID zero policies that they've got can't go on for as long as some people think. It's just economically and probably politically unviable. And therefore, if you look at where the most bad news is, it looks to me like it's in China.
That's a really interesting call. So let's talk about the Fed a little bit and then go back to China. Here's what the Fed Governor, Christopher Waller, had to say on the central bank's rate hike timeline.
I support tightening policy by another 50 basis points for several meetings. In particular, I am not taking 50 basis point hikes off the table until I see inflation coming down closer to our 2% target.
We're back with Mike Bell. So, Mike, on the back of that, what will be the biggest pain threshold or pain point for markets as we get into quantitative tightening?
I mean, I think it's all about the 30-year mortgage rate. Most people in the US aren't even going to notice interest rates going up unless they move home. So it's all about what it does to housing activity, housing transactions, and that's all pinned on the 30-year mortgage rate. How much more can the Fed put rates up? It could be that actually the curve can flatten quite a lot. Short-end rates can go up. 30-year mortgage rates don't move that much. But if 30-year mortgage rates continue to move higher from here, then you're already seeing pending home sales roll over. You're seeing new and existing home sales come under some pressure. That to me is the key thing that markets should be focused on in the US. Yeah. And, when I look at it at the moment, it suggests to me that with Treasury yields where they are, they're a lot less unattractive than they were because it seems like they probably can't go that much higher before it would cause problems for the housing market.
But Mike, are we underestimating then the impact that, QT has on these markets?
No one really knows, I think is the honest answer, right? It could well be that QT causes 30-year rates to go high. It's almost certainly been a factor in helping suppress yields. As QT actually starts to play out, how much higher does it drive things? No one knows exactly how much higher, and no one knows exactly what rate causes a problem. I would just focus on those home sales data because that's the key.
You're making me nervous. Usually you're like so much more upbeat. What's going on?
I think we just have to accept, right? We're in a period for the global economy where it's a lot more uncertain than it was a year or two ago, where, once the vaccines were announced, it was pretty clear we were coming from a beaten-up economy to a world that was going to expand. The problem is things got better so quickly that we're now back with very tight labor markets and hence monetary policy tightening against an environment where house prices have gone up a lot.
Yeah, a lot of people saying it's almost a perfect storm. Mike, thanks so much. Mike Bell, their global market strategist at JP Morgan Asset Management, stays with us. And I really want to get back to his China call. Coming up, China's factory activity still contracting, but at a slower pace as tough lockdowns begin to ease. We have more of that story next, and this is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, China's manufacturing activity shrank at a slower pace in May, suggesting the economic fallout from tough lockdowns may be coming to an end. Now, for more, we're joined by Bloomberg's chief Asia economics correspondent, Enda Curran. So, Enda, good morning again, or good afternoon. PMI is still contracting in May, but the pace was slower than last month. Could we say the worst is over right now for the economy?
Some signs that the worst might be over, Francine, from this PMI reading. As you mentioned, the pace of the slowdown suggests some improvement. When you look at the data, for example, new orders, new export orders, all improving. There was a shortage in waiting time for deliveries for manufacturers. That's key to sort of ironing out some of these supply chain problems that they've been facing. And there was an uptick in employment for manufacturers as well. And obviously, China has been flagging unemployment as a key concern in recent months as the lockdowns have impacted growth. So when you take it together, the PMI suggests both manufacturing and services is heading in the right direction. But really, there's still a long way to go before you could call a full recovery. And nobody's calling a V-shaped rebound, having looked at these numbers either.
So, Enda, where are we seeing the most improvement, if you can break it down for us?
Well, I think the new orders and the new export orders index point to a kind of sense of relief on the production side of things as manufacturers can get going again as these lockdowns are eased, and obviously that's going to allow production to get motoring now. The prospects for that appear to be improving by the day. Shanghai is heading towards a full reopening slowly. Beijing looks like it has avoided a broader lockdown, certainly has avoided the kind of lockdown that Shanghai has gone through. So all of that bodes well for the manufacturing sector, at least improving from here. Of course, the question marks will remain over how much confidence will recover for both factories and consumers, given China continues to pursue the aggressive COVID-0 strategy, which means that at any point there could be new restrictions or there could be a new lockdown, and obviously people will be nervous and sentiment will be wary so long as the Omicron variant continues to spread. So some signs that the economy has hit a bottom, some signs that perhaps the recovery could continue from here, but as I said earlier, no signs of a kind of a rapid V-shaped rebound that we saw back in 2020.
So, Enda, how long will it take to actually get back on track? And I'm not sure what we're talking about in back on track. I think Bloomberg Economics had growth in China at 2%.
Well, most people are saying, look, the growth target of 5.5% is no longer really achievable for the government. They're frankly running out of time to meet that, Francine. It's more about putting a floor under the economy. You know, you can pick your level where that might be. But the authorities are taking measures. I mean, even before I come on today, there's some more news about another tax break for purchasing lower emission cars. That's one of several steps that the authorities have taken in recent steps to boost home buying, to offer tax rebates to companies, and to try and get more spending on projects going around the economy. As I say, we're not talking about sort of widespread stimulus per se that we've seen in past downturns, but we are seeing significant support. The question is, how effective can that be when the economy is going backwards and forwards, kind of in a stop-start fashion with the COVID-0 restrictions going on and going off? And that's the big question. Yeah. How sustainable is both COVID-0 and the economy's recovery in the months ahead?
Thank you so much, Enda Curran there from Hong Kong. Now we're back with Mike Bell, Global Market Strategist at JP Morgan Asset Management. Mike, you say basically, if you look at China, most of the bad news has been priced in, but then I look at a great Bloomberg story looking at China and Chinese banks overflowing with cash that nobody wants to borrow because their confidence is crushed. So, I mean, do we have further to fall in the Chinese economy, or do you think we've hit the worst?
Well, ultimately, it comes down to what happens with COVID, right? They've been hit by just bad news after bad news. First, there was the property sector and the tech regulation, and now COVID. And so, I mean, if you were owning stocks in China 12 months ago, and they're now about 50% lower, I would suggest that now is probably not the time to be selling. At these kind of levels, could they go a little bit lower? Perhaps they could. But if you say on a long-term view, you can buy an economy that's probably going to grow at something like 4% real GDP over the next 10 years.
Yeah.
On a PE of about 10, that seems pretty attractive to me as a medium to long-term play.
But so do you need to make a call on whether, the COVID outbreaks will lead to further lockdowns, or you just look through it and take the longer-term view?
I think it depends on your time horizon, right? If you're a medium to long-term investor, you just look through it. We know these lockdowns are not going to go on forever, so you can just buy these kind of valuations and ride the long term. If you care much more short-term about the outcome, then of course that matters. I mean, what I would say there is that it's ultimately down to vaccinations. The Chinese vaccine, if you get 3 doses of it, is very effective at preventing severe disease against Omicron. So they just need to ramp up the vaccinations. So this market
Easier
view,
said than done.
I mean, it is, but ultimately there's a reason why a lot of people weren't getting vaccinated previously, because there wasn't COVID in China. Right. Now that Omicron is so contagious, and there is, and that's not going away, right? There's going to be Omicron around for a very long time. So now the choice is, do you get vaccinated or not? And clearly, it's much more sensible to be getting vaccinated now. And in China, I think they're going to ramp up the incentives for people to get vaccinated. If it's a case of once you've been triple jabbed, you can go out and live your life, whereas if you can't, you're stuck indoors, then more people are going to get jabbed, I think. So
that usually focuses the mind, for sure.
Yeah.
Mike, talk to me about the UK. What do you do with UK assets right now?
I mean, the UK obviously is a market that's held up pretty well because it's got such a lot of energy and mining stocks in it. So that large cap bit has done fine. I do worry a bit about the outlook for the domestic UK economy. The measures we've seen from the Chancellor, I think, are very generous for the lowest part of the income distribution. And so that should help. But the middle part of the income distribution is still going to feel a very significant squeeze. £400 towards something like a £1,500 increase in energy bills. The key question is that enough?
Yeah. And of course, this will all play out in currency swings with, pound under pressure, but you also have the dollar rally. So how do you play currencies in this kind of volatile environment?
Frankly, I wouldn't take big bets on currencies. I mean, sterling's down a long way already. But, I mean, if you see a scenario where that squeeze on the middle income in the UK does lead to a cutback in spending and potentially a recession, and the US avoids that, well, then there could be further downside on sterling.
Mike, thanks so much for all of the insight. Mike Bell, there, global market strategist at JP Morgan Asset Management, joining us this morning. Now, coming up, plenty more on the markets. We'll also check in on some of your top stock movers, including Unilever gaining after naming a new non-executive director. This is Bloomberg.
Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Economics, politics, finance. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, this is what the markets are telling us. So quite a lot of pressure on European stocks. Look, I wouldn't say quite a lot of pressure, but certainly the kind of pressure that we thought we wouldn't have today, because we did see futures on the higher start. Then they were losing some 0.5%, and now they're down 0.1%. Now, the underlying reason for this is that we're seeing stocks slipping or fluctuating, at least because of the price of oil. Now, that's adding to worries about how aggressive central banks will need to be to rein in inflation without derailing growth. Now, some of the stocks on the move, quite a lot of M&A out there. DSM actually forming a fragrance giant via the purchase of Swiss Firmatech. Now, the resulting company will have an annual revenue of more than 11 billion euros. Again, this is a strategy shift from DSM, and it's nearly complete as it sheds its engineering arm and actually takes control of a company that has been owned by the same family for more than a century. You can see the share price gaining 7.5%. Then Unilever. Nelson Peltz, the activist investor, has been named a non-executive director in Unilever. That share price also on the up. Credit Suisse down 3.3% after it's weighing options to strengthen capital. That's a Reuters exclusive. Coming up, the miracle green fuel that may actually make climate change worse. We talk hydrogen. That's coming up next. And this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Here are your top stories today. Embargo breakthrough. EU leaders agreed to ban most Russian oil, paving the way for fresh sanctions on Putin. Brent jumps for the 9th straight day. Signs of daylight. China's economic contraction eases, signaling the worst of the lockdowns may be past. Mainland stocks climb. Plus, half-point hikes. The Fed Governor, Chris Waller, says he favors consecutive 50 basis point rate increases until inflation comes down. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, we're just getting some breaking news out of DWS. Deutsche Bank's DWS unit, we understand, has been raided, and this is amid allegations of greenwashing. The company, DWS, has been facing the allegations since its former chief sustainability officer, Desiree Fixler, went public with them in August, and that's been prompting regulatory probes in the U.S. and Germany. And we understand that this morning there were fresh, of course, some of the units have been raided amidst these allegations of greenwashing. We'll be talking on this with our Nick Comfort in about 10 minutes from now. But still, sticking with green and greenwashing, it's been hailed as a miracle fuel that can power factories, buildings, ships, and even planes without pumping carbon dioxide into the air. But scientists are now warning that hydrogen carries many risks, including contributing to climate change. Well, that's the subject of today's Bloomberg's Big Take. And to tell us more about this, we're joined by Bloomberg's Akshat Rathi. So, Akshat, just talk us through the concern with hydrogen. It's not that it's bad, but if there are leaks, it could be almost as bad as carbon dioxide. Is that right?
That's right. So the climate problem is a problem that's caused by greenhouse gases. These are essentially gases like carbon dioxide and methane that sit in the atmosphere, and they capture this heat from the sun, and then they don't let it escape. That's what's causing climate change. Now, hydrogen itself is not a greenhouse gas, but when it leaks and it enters the atmosphere, what it does is it extends the life of other greenhouse gases like methane, and that can extend the amount of warming that methane does to the planet. So the story here is that it's a warning. Before we invest tens of billions of dollars into hydrogen infrastructure as a way to try and tackle climate change, we should make sure that the hydrogen does not leak.
So, Akshat, is there just an overarching worry that a lot of the technologies that we use and that have been touted for the green transition, we just don't know the end effect of yet? Is it a bigger warning for some of the things that we will transition to?
Not so much. I mean, we've had struggles with recycling solar panels and wind turbines, for example, and even batteries. But what we do know is that their life cycle emissions, which is the total amount of emissions they would release in manufacturing versus the amount of emissions they save in the 20-25-year life they have, is far more. And so the amount of recycling effort needs to be low. Hydrogen is a different kind of beast because it's a fuel, and we're going to use that fuel in large amounts. And we know from our previous experience that methane leaks haven't been stopped. And so we should make sure that if we start using hydrogen instead, let us stop the leaks.
Actually, is it expensive to stop the leaks, or is it something that, as long as we're aware of it, we can deal with it quite efficiently?
It will be a small minor cost if we think about it before we build the infrastructure. It will be a higher cost if we try and fix the leaks after we build the infrastructure, hence the warning.
Akshat, thanks so much. Akshat Rathi there, of course, with the great Bloomberg Quick Take. Now, onto the markets, because there is quite a lot going on in the markets. So we're seeing a bit of volatility across the board. Stocks, or certainly futures, were higher, then stocks were lower, and now they're creeping back up again. So we're seeing a bit of fluctuation across the board. The one thing we need to watch out for is, of course, the price of oil. The other one is Treasury and Treasury yields, what they've been doing. The picture overall for EU inflation is not as bad today as we had yesterday. Yesterday we had an incredible print, 8.7% higher for German inflation. Today we had French inflation, and that came in pretty much in line with expectations at around 5.8%. Now, the other story we're watching out for is, of course, greenwashing, but also this probe into Deutsche Bank, the DWS unit of Deutsche Bank being raided this morning amid allegations of greenwashing. So, I don't know if we have the market check, but overall, just fluctuation across the board. Let's now get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Russia's planning a bond payment mechanism to sidestep U.S. sanctions and a potential default. The proposal would allow foreign investors to open accounts in Russian banks in both rubles and hard currency. Russia is back in a default countdown after coupon payments in euros and dollars failed to reach foreign investors' accounts on Friday evening, effectively triggering a 30-day grace period. Now, business confidence in the UK rose for the first time in 3 months in May. The Lloyds Bank Business Barometer rose 5 points to 38%, the highest reading since February. The findings suggest more companies plan to increase prices. A strong economic recovery could strengthen the Bank of England's conviction to aggressively tackle inflation. China's factory activity continued to shrink in May, but at a slower pace, as many of the tightest COVID restrictions began lifting gradually in some areas. The official manufacturing PMI rose to 49.6 from 47.4 in April. That compares with the medium estimate of 49 in a Bloomberg survey of economists. The non-manufacturing gauge increased to 47.8 from April's 41.9. President Joe Biden says there are limits to what he can do about guns. Over the weekend, the president visited the Texas elementary school when 19 children and 2 teachers were killed. Biden has renewed calls for Congress to crack down on the kinds of assault weapons that were used to carry out those killings. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. As always, Leanne Gerrans in London with me. Now, coming up, DWS raided in Germany amid allegations of greenwashing. We'll get more on the story with our Nick Comfort in Frankfurt. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, DWS offices have been raided in Frankfurt. That's as the asset manager faces allegations of greenwashing. Well, joining us now is our banking and regulation editor, Nick Comfort in Frankfurt. Nick, this is a Bloomberg story because we've been following it right from the very beginning. This is basically allegations since its former chief sustainability officer blew the whistle in August. How much worse are things looking now?
So this is, we don't have the full picture yet of sort of what exactly prosecutors are probing, or the federal police. What we do know at this stage is that multiple police officers or authorities have entered the DWS buildings and the Deutsche Bank buildings here in Frankfurt. A security guard we spoke to on the ground said that these were federal police. Our understanding beyond that is also that this relates to greenwashing, but exactly what they are probing and whom they are probing within the companies, we're still working on that part.
Nick, we know that DWS has actually denied the claims, but of course the raids just add to a list of regulatory and legal issues for Deutsche Bank. Is there a reputational damage as well?
That's a good question, Francine, because when these claims first came out, I think there was a large assumption by many investors and analysts that maybe DWS would see their assets under management fall because of this. But actually, assets under management at DWS have held up pretty well over the last couple of quarters. So they've managed to really shake off some of the concerns around probes by the SEC, by BaFin into greenwashing. Whether this changes the picture will remain to be seen. Also, what it means for various executives at the company, whether this has an impact on them, is also a factor. But actually, so far, the bank has managed to, and the asset manager has managed to deal with it quite well.
Nick, we understand that law enforcement officials entered the Twin Towers. Can you give us any color on, how big this operation was?
So we saw 2 vans pulling up at the Deutsche Bank Twin Towers, and then we saw a total of what we believe to be about half a dozen cars with Wiesbaden plates. Wiesbaden is the head of Hesse, the state where I'm based, and that's generally where law enforcement come from. We saw them pulling into the DWS parking garage just now, and more photos on that to follow. But so we believe it's a significant operation, but however, compared to the raids that Deutsche Bank has experienced in the past, it's much more low-key. There were no armed guards, there were no police cars with flashing lights on top. So this is something, reputationally, it's not good, but again, it's not a full confrontation with the German justice system either.
Nick, thank you so much. Nick Comfort there from Frankfurt. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Shares of Unilever jumped today. Activist investor Nelson Peltz has been appointed as a director, and his Trian Fund Management has taken a 1.5% stake in the company. The appointment comes after a difficult period for Unilever. CEO Ian Jope failed in an attempt to take over the consumer division of GlaxoSmithKline and has had to grapple with steep inflation in costs. PIMCO has emerged as a key player in a panel meeting on Tuesday that will decide whether Russian credit default swaps will pay out. SEC filings show PIMCO's income fund sold more than $100 million of the securities to banks including Barclays and JP Morgan in the first quarter. That added to almost $1 billion in bets on Russia via credit default swaps. US investor Todd Boehly has completed his $5.4 billion takeover of Chelsea Football Club. It ends almost 20 years of ownership under Russian billionaire Roman Abramovich, who was forced to sell under sanctions imposed over the war in Ukraine. The deal means that for the very first time, more than half of the teams in the English Premier League are now actually backed by American money. Canadian media giant Rogers and Shaw Communications have decided not to close a $20 billion billion Canadian dollar deal until antitrust problems are dealt with. The company said they're working to negotiate a solution to concerns by Canada's Competition Bureau, which is trying to actually block the takeover. Toronto-based Rogers has been trying to acquire Shaw in what would be one of the largest mergers in Canadian history. Taiwan-based iPhone maker Hon Hai expects supply chain disruption to gradually clear up as Shanghai slowly opens to trade following months of COVID lockdowns. Hon Hai chairman Yang Liu told shareholders the company is now more upbeat about its 2022 sales outlook than before. Hon Hai is Apple's biggest assembly partner. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Leanne Cairns in London with me now. We've also had plenty of corporate action this morning, a lot of deals. So let's check in on those deals with Bloomberg's Farid Saloul. Farid, thank you for joining us. DSM, no longer an engineering company, now a fragrance boss.
Morning, Francine. Yeah, it looks that way. We've essentially got two deals in one here with DSM. Firstly, they've bought the Swiss fragrance maker Firmenich. That's going to create one of the largest companies in this kind of sector for perfume scents and food flavors. And that very much kind of ties in with DSM's pivot towards those kind of business lines. At the same time, it's sold its materials business, its thermoplastics business to Advent and Lanxess. That gives it about $3 billion to play with, presumably for this deal.
GSK, big company here in the UK, and they want to bolster their vaccine pipeline.
They do indeed, and to do that, they're spending about $3.3 billion on a US vaccine maker called Finivax. Emma Walmsley, as you say, she's under pressure to kind of build up this pipeline of novel drugs in later stage development, and they've got pressure from activist shareholders, Elliott, pushing them to do that, and a few other bits and pieces.
Yeah, I feel like activist shareholders are everywhere. If you look at Telecom Italian, this is a big one with the $21 billion deal.
That's the one, yes. So we've reported, it's a big one today, we've reported overnight that that's the valuation they're seeking for this this network that they're selling to, network assets that they're selling to Italy's state-backed lender CDP. Big chunk of money that they can use to pay down debt and finance their fiber rollout.
Yeah, I feel like we quizzed the Telecom Italia chief executive. It was so uncomfortable for the last couple of months. Like, what are you doing with it? So finally, we have the news.
Absolutely, yeah.
Farid, thank you so much. Farid Saloul there with today's deals to watch. Now, coming up, EU leaders agreed to pursue a partial ban on Russian oil. We'll discuss their meeting today and Eurozone inflation next. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front row, the best seats in the house for business's greatest minds.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London. Now, European Union leaders have come together to back a ban on Russian oil that covers more than 2/3 of imports. Earlier this morning, Latvia's Prime Minister told us what was next for the bloc.
It should be a full energy embargo, oil, coal, and gas. We, before the war, were about 90% Russian gas dependent. We are no longer buying any gas from Russia. I also don't see the point of talking with someone who's committing genocide in a neighboring country.
Now, this comes a day after Germany and Spain both reported jumps in consumer prices. Inflation in Germany is actually now at the highest level since reunification back in 1990. Now, full inflation figures for the Eurozone will be released in a few minutes at 10 a.m. UK time. We had French pretty much in line with expectations earlier on. Now, for more on this, looking at the politics and the inflation side of things, Bloomberg's Maria Tadeo is in Brussels for us, and Ksenia Galuchko is in London. So thank you both for joining us. First of all, Maria, pretty significant agreement, and I was extremely touched listening to the Latvian Prime Minister also saying, look, it's really up to the Ukrainians to say when this ends.
Yeah, and Francine, those are the two fundamental questions here. One is, what do you do with sanctions? And of course, the mood music here from multiple European leaders is that yesterday, when you look at the fine print, yes, we talked a lot about Viktor Orban, and yes, we talked a lot about Hungary. But if you look at the full picture and you see the seaborne embargo and that pledge from Germany to really cut down pipeline imports, you could be in a situation where, best case scenario, there will be a reduction of purchase of Russian oil into the European Union by 90% at the end of the year compared to pre-war levels. Also, you played it in that interview that we did with the Latvian Prime Minister, where he says, we're not done with oil. The way we see it, we should now tackle gas. And this is going to be the next frontier. Although I should say, Francine, the more you move into gas, the more these sanctions bite home and they bite on the national market, the more difficult it becomes to have the debate. And then the other big issue here is we talk about Ukraine, the war in Ukraine, helping the Ukrainians to win. That is what the European leaders repeated yesterday. But when I asked them, what does it mean? To me, it is not clear what the meaning of it would be, what it entails, and ultimately what the end goal with this war is. So there really needs to be some kind of soul searching here from European leaders to really figure out what is the end goal from a European perspective, and what does that victory mean, and how can they further help Ukrainians. By the way, the Ukrainian president repeated that yesterday. We need your help in order to continue to fight in a week where the war in Donbass, we know, has become very difficult for the Ukrainians.
Yeah, of course, victory means very different things for Ukrainian officials, which is getting every single Russian soldier out, and actually some of leaders in the West who say, well, maybe it's some kind of ceasefire or agreement. Ksenia, when you look at the oil embargo, how are the markets taking this?
Yes, while this is a major political victory for the European Union and its fight against the Russian aggression, for markets it's much more discouraging, actually, because it means that inflation is likely to continue going up. So we see oil surging on the news, right? And oil has staged an enormous rally this year on the supply constraints and risks around the war in Ukraine. So energy stocks, for example, in Europe are outperforming all other sectors, while most sectors are in the red. Energy is green, and it is the best performing sector overall this year. So for investors who are getting into those oil majors, they've been doing really well, unlike the rest of the market, of course.
Yeah, and Maria, when you look at what else is dominating the discussions, it's food inflation. We talk about famine in Northern Africa, but I don't know what leaders convened there in Brussels, where you are, have the power to do.
Yeah, and Francine, actually, we're just hearing from a diplomat who's now in the talks that are actively happening here, saying that there is or there will be an active discussion on the food situation. Remember, the Ukrainians, Francine, they say that Russia has sequestered, essentially stolen more than 22 million tons, of grain, and that these are blocked, and Ukrainian ports are now under Russian occupation, but also the logistics severely damaged as a result of the war. Now, yesterday, Zelensky jumped in this call with European leaders. He gave a speech for about 7 minutes, and he said, I really do need the help to be able to unblock some of these ports if we're really serious about tackling this food crisis, which for a lot of European leaders, I should say, Francine, is a huge concern. You know, they worry about the domestic implications, the economic impact, food inflation, perennial conversation, but also the social unrest and the potential consequences it has on issues like migration on Europe.
Yeah, and of course, people taking to the streets. I mean, you could have, the emergence of either far right or far left, Ksenia. And this is one of the things that we were really hearing in Davos in all of the panel discussions. Inflation figures coming out of the Eurozone a little bit later today, actually, in just a couple of minutes. What can we expect?
Well, we've already seen very concerning figures from Spain, Germany, and France today. So I think the expectation is that euro area inflation will surge. The issue is that it's putting a lot of pressure both on risk assets, but also on central bankers. So the ECB is meeting next week. It is supposed to set the stage for that July rate hike. It will be the first rate hike from the ECB in over a decade. And the question now is, how rapidly are they going to keep hiking? Are they going to follow the Fed in more rapid 50 basis hikes, or are they going to go for milder 25 basis point ones?
Yeah, I mean, again, this inflation, I mean, it has huge implications for right about everything. But yeah, concretely, is there anything that leaders can do? I mean, we talk about, for example, the price cap for energy prices. You can't do that with inflation because it's not food inflation. It's also there's just such a shortage that just cannot be filled.
Yeah, and it's supply issues, and what they say is a lot of this is import and inflation as a result of the war in Ukraine, which is very hard to forecast and manage precisely, Francine, going back to the point we mentioned earlier, because we don't know what that end goal looks like. Nobody knows when the war will end, whether we're going into a long, protracted conflict, or actually there's a faster way out of this. And then the other issue, of course, is that you see that the technicalities of these deals are actually very, very hard to manage. You know, when we talk about a price cap, when we talk about a tariff, the real life implications of this, as we're seeing with this package, they're very difficult to manage, actually. These are very technical issues, far beyond the politics.
Thank you both for joining us, Maria Tadeo and Ksenia Galuchko here in the studio. Now, this is the picture for markets. They're fluctuating, they were up, they were down, and now they're just borderline in the green. The Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Kaylee Lyons in New York, or Guy Johnson is actually here in London, and this is Bloomberg.
nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question. Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
We are sort of in uncharted territory, like we've sort of never been here before.
What the market has told us over the last 3 months really is they think the Fed has got this.
It's not like they're going to jump suddenly from being hawkish to dovish.
I think the time has passed for a soft landing.
The market has been so focused on the Fed story, it's missed the European story.
Everybody's facing an inflation problem right now.
The consumer is really the most important data point here.
This is Bloomberg Surveillance, early edition with Anna Edwards, Matt Miller, and Kaylee Lines.
10 a.m. in London, 5 a.m. in New York, 5 p.m. in Hong Kong on this Tuesday, May the 31st. Our top stories today. President Biden, Secretary Yellen, Chair Powell meet today in the Oval Office at 1:15 Eastern. Top of the agenda, you guessed it, inflation, inflation, inflation. Talking of which, French consumer prices surged to a fresh record high. Eurozone CPI is breaking right now. 8.1 is the number. Will the ECB be forced to go 50 in July? And crude continues to climb as the EU agrees a partial ban on Russian oil imports. We're live in Brussels with the latest on that story. Welcome to Bloomberg Surveillance Early Edition. I'm Guy Johnson in London, Matt Miller and Kaylee Lines in New York. Anna Edwards is off today. Kaylee, let's talk about Asia. The Chinese PMI data, really interesting.
Yeah, it was still in contraction territory when it came to that manufacturing PMI figure for the month of May, but it shows a slower contraction than previously. So that may indicate that the worst of the economic ramifications of COVID-0 and the lockdowns in Shanghai have already hit the Chinese economy. Speaking of, we know that those lockdowns already are starting to ease in that area in particular. Cases are dropping, all of that bolstering some optimism for Chinese assets. That's really what led the gains in Asia overnight. The CSI 300 up about 1.6%. The MSCI Asia Pacific Index as a whole up by just about 0.4%. But that, as I said, eases some concern around the Chinese growth story. And in the bond market, you really see the focus shifting from growth back toward inflation. And that is reflected in selling pressure really in global bonds across the world. Yields moving higher, including in Australia and New Zealand, up about 10 basis points on that 10-year yield in Australia overnight, up about 7 basis points on the New Zealand yield, which sits at about 3.61%, Matt.
All right, we are looking at S&P futures, Kaylee, that are bouncing back and forth between gains and losses. So it's not really clear if we're going into the session risk on or risk off. You can see the yield rising on 10-year bonds, investors selling the paper, and right now we're yielding 2.82%. But there's a real back and forth, a real push-pull in terms of yields and whether bonds are a buy right now or not either. Check out New York crude right now, up 3.33%. This is probably the most interesting and the most important of the major assets that we're watching today because we're really concerned about inflation. We've had massive increases in Germany and Spain, recording an all-time high since they started reporting inflation in this way. So it's a huge problem for governments around the world, certainly in Europe, but also here in the U.S. Bitcoin finally, we're looking at $31,600. So Bitcoin had a big lift yesterday, a big lift over the weekend. Remember, we were down at 28,000 on Friday, but it's really been hovering around this $30,000 level for the last couple of weeks and not a lot of big movement away from there. I just think, Guy, this is significant in that it's been so correlated. This is a signal that maybe markets are going to be risk on throughout the day.
Big show coming up later as well, Matt. I know that you and Kaylee are going to be talking about this a great deal on the crypto show a little bit later right here on Bloomberg. Let's recap that data we got at the top of the hour. I mentioned the 8.1 Eurozone headline number. That's versus an estimate of 7.8 and a previous number of 7.5. Italian May inflation rate rising to 7.3. The median estimate there, 6.7%. We know that we've got the QE story in June. The question is, do we get 25 or 50 from the ECB in July? That is the live debate right now. Is the ECB so far behind the curve it now needs to play massive catch-up? Let's talk a little bit about what we're seeing in terms of the asset story today. Stock 600 down by 0.2%. Remember, European markets were open yesterday. You've got euro dollar trading still with a 107 handle, but it is dipping. The dollar's coming back today. Pay attention to that story. I'm really fascinated to hear what comes out of this meeting in the Oval Office. And Brent Crude, Matt was mentioning what is happening there. Pick up yesterday on the back of the Chinese news. And today we get another lift as a result of the European news on the partial embargo that we're going to see for Russian crude. I want to show you as well, it is the 31st. We've got a month-end phenomenon that we need to talk about as well. But this is the story over the last 31 days. We're trading 445 today. In terms of the round trip, it really isn't a very big one. Basically, we've dipped and come back. The stock 600 over the month, Kaylee, up by just 0.3%, but it is a positive number.
Yeah, it feels like there's been so much volatility only for us to end up essentially flat on the month, Guy. And I know I say this every month, but I can't believe tomorrow is already June or only June. I never can decide which one. Now let's take a look, other than June, starting at what is ahead this week. Today, President Biden will be holding a rare Oval Office meeting with Fed Chair Jerome Powell. We understand Treasury Secretary Janet Yellen will also be in attendance. Plus, later on today, we will get the latest read on the U.S. consumer with consumer confidence data crossing the wire. We'll also be hearing from Fed speakers throughout the week, including Loretta Mester and Lael Brainerd. And there's a virtual OPEC Plus meeting happening on Thursday. And finally, rounding out the week, U.S. Jobs Day is on Friday, Matt.
All right, very important stuff then coming out this week, but it already kind of kicked off yesterday in Frankfurt in terms of the Fed. Governor Chris Waller said he wants to keep raising rates in 0.5 percentage point steps until inflation is under control. This comes after the Fed raised rates by 0.5 point this month and indicated it's going to do the same in June and July. Waller spoke on Memorial Day, as I said yesterday, out of Germany.
I support tightening policy by another 50 basis points for several meetings. In particular, I am not taking 50 basis point hikes off the table until I see inflation coming down closer to our 2% target.
I had someone ask me last week if they celebrate Memorial Day in Germany, and the answer, without being rude, is simply no. Meanwhile, President Biden will hold a rare Oval Office meeting today with Fed Chair Jerome Powell to discuss the economy and rising inflation. I think Yellen's going to attend as well. But this is the first meeting between the president and the Fed chair since Biden announced his intention to nominate Powell for a second term. Joe Matthew, Bloomberg Washington correspondent, joins us now in D.C. for more. Joe, so how rare is this?
Well, to your point, it's been since November. That's when they last sat down, Matt, in the Oval to talk about then Powell's renomination. And to your point as well, Janet Yellen is going to be here. Look, these Oval meetings are rare, but the Fed is very much in touch with the administration on a regular basis. Jay Powell has a weekly standing breakfast with Janet Yellen, and the Fed has a monthly lunch with members of the White House Council of Economic Advisors. Important to remember. The White House likes to remind us, of course, Matt, as you know, that this is an independent Fed, and the president himself has said that he's never going to do what the last guy did, as he says, in the prior administration when Donald Trump used to enjoy kind of poking the Fed on Twitter and telling them it's time to cut or time to do whatever. In this case, the White House wants to give the impression here that the Fed is independent, and of course it is. But this conversation will serve a couple of different things. So first, they're going to talk about what the president refers to as the biggest, most important issue on the campaign trail, and that is inflation. But it's about optics, right? You're going to have images of them in the Oval. They're going to let the press pool in for the beginning of this. It's not a news conference or a briefing, so you'll see images of the three of them on the couches. They'll likely have some questions shouted at them. And Matt, this isn't going to be like a Bloomberg type of exploration, whether it's 50 or 75 basis points. You're going to hear questions like, has inflation peaked? And the president, the administration hopes to generate mainstream news headlines out of this meeting today.
All right, Joe, while President Biden continues to be focused on the economic picture, he also is fresh off a trip to Uvalde, Texas, where he visited that elementary school where 19 children and 2 students were killed in a mass shooting, and 2 teachers, I should say, were killed in a mass shooting last week. And the president saying, look, there is limited measures I myself can take on the gun control issue. He said a lot is up to Congress. What is the likelihood that Congress is realistically going to do anything?
Well, he is right about that, for starters. You might remember the president signed an executive order to regulate ghost guns a few weeks back, but he doesn't have a lot of options here without Congress, and that's why we're watching very closely to see Democrat Chris Murphy in the Senate and Republican John Cornyn talk about any sort of way forward here on likely red flag laws. That seems to be the concept that Democrats and Republicans can get together on. But the window is short here. If there is going to be a move, they're going to have to do it now as soon as lawmakers come back. Kayleigh, they've been meeting by phone and Zoom over the holiday weekend. Those talks are expected to continue for the week. Chuck Schumer, the majority leader, though, says when lawmakers do come back to town, if there's no compromise, Democrats will move forward on a bill. The problem is they don't have the votes to change much.
Joe, thanks for the update. Really appreciate it. Bloomberg's Joe Matthew joining us out of D.C. And, of course, you can listen to Joe every weekday on his radio program, Sound On, 5 p.m. Eastern Time on Bloomberg Radio. Now, oil is heading for its longest run of monthly gains in more than a decade. This after, well, a bunch of factors come together. China's one of them, but now we've got EU leaders also agreeing to pursue a partial ban on imports of most Russian crude. Our European correspondent, Maria Tadeo, spoke to Latvia's Prime Minister at the EU Council building earlier today.
It should be a full energy embargo, oil, coal, and gas. We, before the war, were about 90% Russian gas dependent. We are no longer buying any gas from Russia. I also don't see the point of talking with someone who's committing genocide in a neighboring country.
Maria joins us now from Brussels. Maria, there was a lowering of expectations yesterday that anything would be achieved at this summit. We have had something achieved. We have a partial ban. How significant is this?
Well, I think it's actually more significant than you would think when you look at this from first sight. When you look at just the situation yesterday in the morning, everyone here was incredibly pessimistic about this deal happening. There was talk of a watered down package. And today what we have is a partial oil embargo. Like, technically that is correct. Initially, it just looks at seaborne oil. So that is a transportation of Russian oil exports into the European Union by sea. But that would put an end to 2/3 of the purchases. The other big important thing is that, yes, there is an exemption to pipeline oil, but yesterday the Germans, which are the big buyers, they continue to say by this year they want to exit this position. So you could be in a situation where by the end of this year, the amount of oil that comes from the Russian Federation into the European Union could decline by 90%. Now, for many officials, this is seen as a moneymaker. It's the oil, not the gas. The gas is a geopolitical weapon. So many today are actually more optimistic about the prospects of this and say that when you take a bigger look at this, what was achieved yesterday was significant. The one thing I would note, however, is that I do hear repeatedly from a number of officials that say at this point, having done this, we need to take a breather. We need to take a pause, and we don't want to talk about gas because this could be a real detrimental impact on the EU. However, some other countries in the Baltics say a full ban is needed. So you could see some political tension in terms of what comes next.
Yep, and that's going to feed through into the inflation numbers that we've been watching so carefully here today. Maria, great stuff. Thank you very much indeed. Maria Tadeo joining us from the Council building in Brussels. Let's turn our attention now to what is happening in China. China's factories still struggled in May, but the data we got out overnight better than expected. The numbers suggest that the worst of the current economic fallout from lockdowns may be coming to an end as the country starts to reopen. Let's get more now from Enda Curran, our chief Asia economics correspondent. A silver lining then maybe in this data.
Yeah, some signs that perhaps the economy is now bottoming out. When you look at the data, there was an improvement for new orders, improvement for new export orders, employment in manufacturing is picking up, delivery time for manufacturers is improving. So it all suggests the manufacturing sector is getting back on its feet, as is the services sector. But as you mentioned, Guy, it's still in contractionary territory. The economy, especially Shanghai, is slowly reopening. But a question that a lot of people are asking is, how long can the reopening go before the aggressive COVID-0 strategy forces another round of restrictions, or even something more severe than that, maybe another lockdown? So it's a question of how sustainable this recovery is going to be. The authorities again today rolled out yet more support measures. They're talking now about tax support for those buying low-emission vehicles. But despite the headline positive take on today's data, a lot of people are saying China is nowhere near a V-shaped recovery.
I have to bring up a story that sounds silly at first, but could have real implications. In the Top Gun sequel, Maverick is wearing a jacket with the Taiwan flag on the back. There was applause apparently in Taiwan when this was shown at the premiere, but this movie will not be shown in China. Does this highlight growing tensions between China and Taiwan, between the U.S. and China?
Well, China-US relations are obviously tense over Taiwan anyway, so this movie will certainly be an irritation in the mix of all of that. Like you mentioned, it's not expected to be shown in China, but what it could be signaling, Matt, is that perhaps now Hollywood is pushing back against Chinese censorship. They had been criticized for bowing to Chinese censorship in recent years. This flag hadn't been seen in a trailer for the movie back around 2019, according to her own reporting, and it has made an appearance now, and that might be seen as something of a gesture of a pushback. But, in the broader scheme of things, it's unlikely to necessarily change the US-China relations over Taiwan. That's already tense enough as it is. We've seen the reaction over President Biden's comments last week, and I think that remains on the trajectory that it is.
Enda, great stuff. Thank you very much indeed for updating us. Enda Curran, I've yet to see the movie. Our producer has seen it twice. I feel I'm definitely letting the side down. Okay, let's turn our attention to a Bloomberg scoop. Deutsche Bank and its asset management firm DWS have had their Frankfurt offices raided this morning by police. This, of course, adding to legal headaches facing Germany's largest lender. Our banking and regulation reporter, Nick Comfort, joins us now from Frankfurt. So, Nick, again, unmarked police cars outside Deutsche Bank. Can you walk us through the details of what we know?
So we've seen unmarked police cars moving into the parking garage over at DWS and also 2 police cars over at Deutsche Bank. More police cars over DWS, and clearly they're in focus on this one. The Frankfurt prosecutors have sent a statement saying that this relates to greenwashing. Now, we've had a long saga with a woman who calls herself a whistleblower, so a former DWS employee, their chief sustainability officer, who had accused the company of greenwashing, of not living up to what its customers expected when they invested in ESG products. Now, what the prosecutors, they're saying today is that this relates to unnamed and unknown staff and managers at DWS. We've got to see whether they say they have indications that DWS has not been living up to its standards here. But ESG is such a squishy topic, and I'm not sure they're really going to be able to. I'm interested to see what they can turn up.
All right, Bloomberg's Nick Comfort in Frankfurt, thank you so much. Now let's get back to the U.S. markets and take a look at some stocks moving in pre-market trading. We're going to talk about Top Gun Maverick again. Guy hasn't seen it yet. I haven't seen it either. I have tickets for Friday, but a lot of people went to see it over the weekend. It grossed more than $100 million Friday through Sunday alone, and that is lifting shares of movie theater operator AMC Entertainment. It's up about 3.3% before the bell. Among other groups of stocks moving to the upside would be basically anything tied to cryptocurrencies after gains we saw for the likes of Bitcoin Bitcoin over the weekend, including Coinbase, the big crypto exchange. It's up about 4%. And of course, we also were just talking about the European oil story with Maria Tadeo. That is lifting oil, and it's lifting, in turn, energy shares in early hours here in the U.S., including Occidental Petroleum, up about 2.75% before the bell guy.
In my defense, I did see the original one at the cinema.
Fair
There are a few people in this office that can say that. There are many that can't.
I did.
Okay. Yeah, exactly. I think Matt and I may be in the same camp on this one. Okay, so euro area inflation hitting a record high. How hard does the ECB need to go? Sebastian Galli, senior macro strategist at Nordea Asset Management, is going to be joining us next. We're going to talk about that oil story that Kayleigh was mentioning as well. Martin Ratz, chief commodity strategist and head of European oil and gas research at Morgan Stanley, joining us a little later. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Surveillance Early Edition. We are simulcast on Bloomberg Radio and Bloomberg Television. I'm Matt Miller here in New York with Kayleigh Lines. Guy Johnson is with us out of London, where they have a real inflation problem. I mean, we do here as well, but Europe is seeing record numbers. In fact, Spain has the highest level of inflation since they started measuring it in a new harmonized European way. We've seen big inflation prints, more than expected in Germany, as well as overall in Europe. Joining us to talk about this is Ksenia Galuchko. She is Bloomberg's equities team leader. And, you know, I felt like we should see more of a risk-on sentiment today, with China maybe ready to ease lockdowns and the month of May coming to an end. But this is still a huge problem, isn't it?
It is a huge issue, that's right, because there has been some expectation that inflation will finally peak and start slowing from here, but not yet, as we see from today's European numbers. Inflation remains a huge concern. And this is a very important moment because the ECB does meet next week, and they will have to send a strong message about the upcoming rate hikes that they're planning. So the July rate hike will be the first in over a decade from the ECB, and it'll be very significant because we'll have to see, will they go for 25 basis point hike, a more tame one, or will they be brave and go for 50 basis point one, considering how high inflation numbers are in Europe?
So Brent's up 15%, the Euro's up 1.9%. This is month to date. And the real surprise for me, and I had to double check the numbers, equities are actually higher on the month.
Yes, that's the amazing thing. And even the S&P 500, which was flirting with a bear market just a week ago, might have a small bounce this month or flat in May. I mean, it's really quite fascinating, but it just shows you that equities are always thinking ahead. So the sell-off that we've seen since the start of the year, and it's been a very, very big sell-off, I must say, mainly driven by growth and tech stocks. But generally, the markets have done poorly across the world, in Europe and the US and emerging markets. You know, maybe it might be time for a bounce. So Citi's flagship index, for example, of red flags is now saying that it's time to buy the dip. And there's other strategists that are saying that it's not just a bear market rally, but there might be opportunities now to pick it up from here.
Mike Wilson over at Morgan Stanley, not quite so convinced, but I don't think any of us are going to be surprised by that. Ksenia, great stuff. Thank you very much indeed. Ksenia Galuchko joining us on what is happening in markets. For more market analysis, of course, you can check out our blog live on the terminal, MLIV Go, on your Bloomberg. This is Bloomberg.
Stories about what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Wherever you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Both stocks and bonds getting sold today as inflation fears come back to the forefront. 8.1%, the latest number out of Europe. We'll discuss it with Sebastian Galli, senior macro strategist at Nordea Asset Management, coming up next. This is Bloomberg.
know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. So what do you need to know? Let me tell you, President Biden, Secretary Yellen, Chair Powell, meeting today in the Oval Office. The time, 1:15 Eastern. Top of the agenda, yep, you guessed it, inflation, inflation, inflation. Talking of which, Eurozone inflation accelerated to a fresh all-time high, posing further problems for the ECB. Will the central bank be forced to go 50 in July? And crude continues to climb as the EU agrees a partial ban on Russian oil imports. We're going to discuss that with Martin Ratz of Morgan Stanley in just a moment. I'm Guy Johnson in London, Matt Miller, Kaylee Lyons over in New York. Anna Edwards is off today. Matt, let's talk about the setup. You guys have had a day off. What are we looking like this Tuesday?
Yeah, I thought, we had a day off. May's coming to an end. China looks like it may be ready to loosen lockdowns, and that could drive demand. We see it playing through in oil, and I thought it would be positive for U.S. futures. We were briefly at around 445 this morning, higher, but now we've come back down about 1/3 of 1%, and investors are selling 10-year debt. That should be risk on as well, right? The yield floating up to 282. If they're willing to let go of that safety, then they should be putting their money into something less safe, more risky, I should say, like stocks. That's not happening yet. NYMEX crude is rising 3.2%. This certainly on the Chinese move. We've heard from people like Simon Kennedy and Javier Blas that if China's lockdowns are loosened, you'll see demand rise instantly. Indeed, they're allowing cars on the streets in some parts of Shanghai now, and right now NYMEX crude is up to 118. This is not a Brent quote. This is Texas Intermediate. Bitcoin is also up 1%, but it had, I think, a 5% gain yesterday, so it's back up far above 30,000 at 31,583. And although it's not, in Bitcoin terms, that's not a lot of volatility, but it's starting to move higher, and that should be a risk-on indicator as well. Kaylee, what do you see in terms of the pre-market?
Well, of course, it was really the gains for Bitcoin over the weekend that were notable when Bitcoin was trading, but no other equities here in the U.S. were trading, of course, for the long holiday weekend. So you're seeing some of those crypto-related stocks playing catch-up to the weekend gains of Bitcoin in pre-market trading. The likes of Riot Blockchain up about 7 percentage points, and MicroStrategy, which is basically a Bitcoin proxy stock because it holds a lot of it on its balance sheet, it's up about 11%. And you're also seeing, along with the gains for oil that Matt was mentioning, you're seeing a lift for stocks really across the energy complex in early hours here in the U.S. That includes Occidental Petroleum and Marathon Oil, each up in the ballpark of about 2.5%, Guy.
Let's talk about what's happening here in Europe. We've got inflation data to digest. We'll talk about that in a little bit more detail in just a moment. Today, stocks are lower. I'll show you the monthly number in just a moment. But today, we're all the fours. We're down by 0.4%. We're keeping a keen eye on what is happening with the inflation narrative. What impact will that have on the European equity story going forward from here? Clearly, margins in focus. Euro dollar trading 107.31. We're hanging on to that 107. Is the ECB really prepared to go 50 in July? What kind of a message would that send? Brent crude, 123.66. Matt was mentioning TI. We're up by 1.64%. Yesterday was news out of China in terms of the loosening that we're going to see in Shanghai and Beijing that drove oil prices up to around 120. Today we get a second leg, that driven by the fact that we're seeing Europe delivering a partial ban, a seaborne ban on Russian crude. The pipeline is going to continue to supply crude to Central Europe, but nevertheless, just another factor in messing around with this market and limiting supply. I mentioned the one month chart. Yeah, I got that right eventually. 1 month, we are trading up by 0.2%. It's getting awfully close, Kaylee, in terms of delivering a positive number for the month of May.
Yeah, just a fractionally positive one, Guy. But of course, the European markets right now are trying to grapple with the inflation story. 8.1%, the number out of Europe this morning. 39.1% CPI year on year is the number we are looking at out of Sri Lanka. That is a far greater number than the estimate, which was for 35% consumer price inflation in that country. And we know that it has led to some serious political instability in Sri Lanka in particular. So let's continue this inflation conversation. Joining us now is Sebastian Galli, Senior Macro Strategist at Nordea Asset Management. So Sebastian, let's focus on the European inflation story in particular, which Guy was just talking about. 8.1%. What does it mean for the ECB?
What it means for the ECB is that they're in trouble. But the problem is what type of inflation are you talking about? It's an inflation which has been surging on the back of supply chains as well as on the back of rising oil prices for multiplicity of reasons. Under investments in oil prices, good demand before from China, probably recovering from China again. And the way you can control inflation is what is really domestic, a wage inflation spiral. But the other way you can control it is through the level of the exchange rate, because that will determine imported inflation from commodities such as oil prices. And what it's flagging is a 2-rate hike, at least of 25 basis points, starting in July. And of course, we're going to get the new forecast. But the reality is it probably should do more.
Sebastian?
No, I think it should do 50 basis points and a series of 50 basis points to raise the level of the euro probably to 120 to 130 level, but it won't do it because it's really hoping that it can gain that battle of time. Over time, it will win. Because energy prices probably won't rise dramatically from where they are right now. But it's a very dangerous game to play because over time, people get more and more frustrated. We saw that in the French elections. We're going to see that maybe in the legislative elections and other elections around Europe. And it also has an impact on the behavior. People start to get annoyed. It's really expensive. I can dip in my savings of a month or 2 months, but over time, you get really annoyed. And that creates political frustrations, pressure on the labor market, and creates very bad dynamics. Yeah. And it's just hoping
annoyed
for the
or
best.
hungry, right? Sebastian, at what point? I mean, have we peaked in inflation right now? You said the energy pressures maybe aren't there anymore because Europe is kind of talking about an oil embargo, but they're obviously not going to stop sending money to Moscow for gas. So is that off the table? And maybe inflation, this is as high as it gets?
Well, the energy part is interesting because as China reopens, it does create more demand. And so oil prices we saw today and probably going to continue to see for the next 2 weeks are still rising. But there's also a feedback loop from the fact that you have very elevated level of oil prices on demand consumptions all around the world. So we're probably getting closer to high levels of energy. The question is really on the supply chain, and it's probably improving over the next few weeks. But we have shocks still percolating from Shanghai, a little bit Beijing, and possibly other parts of China. And we see some snarling also on the East Coast, on the West Coast in the U.S. So it's not yet over. There's just too much demand, too much liquidity, and what we call the supply curve is simply too inelastic. It's reacting a lot to very little. Prices shoot up, but they also shoot down also very fast.
Is there an asset, Sebastian? I mean, if you had a dozen eggs that you had to put in one basket, is there an asset that you like right now?
Yeah, probably what you're focusing on is a like of Air Liquide, Coca-Cola. You want to have companies which have solid earnings, are not, if you look at their maturity cycle, they're not at the end. They're not going for obsolescence. They're doing quite well. Coca-Cola is another one. So you focus on quality and value, and that will drive you through for the next few quarters when the environment is more complex than it has been for the past few decades.
Sebastian, how high does euro-dollar need to be for it to have a meaningful impact in terms of reducing the energy impact on Europe's economy? And what is it going to take to get the Bund to 1.5? We're at 1.07 right now. Do you see 1.5?
Well, if you think you're invested in the market and you have a world which is so uncertain, and what are you going to do in this world when you're concerned, you don't know if you should invest in equity or not, you hold a position which we call high quality liquid assets, and you put a lot in the dollar, and you put a lot in bunds, also Swiss franc, Japanese yen, a little bit. And so you hold that position. That means the bund curve is artificially maintained low. But as the ECB is forced to act, that curve also will start to steepen and move in parallel shift forward. So it's probably something to look forward to.
Okay, back to the question of the euro. If the ECB wanted to use the euro as a tool to reduce the energy impact, how high would it have to be?
I mean, you just have to look at the size of oil price movement that we've seen. So euro needs to move a lot, and 120 to 130 just brings euro back towards reasonable levels, towards the average. What has the ECB tried to do over the past many years is try to weaken the euro versus everybody, particularly relative to the dollar through negative interest rates, the same way as other central banks have done before them. Sweden, for example, Denmark, Swiss are attached to the eurozone like big satellites with a big core in the middle, and it's just not a very nice strategy to do when you're fighting with NATO against Russia in a proxy war. So you need to move away from negative interest rates. But then the big question is, how high do you want to push euro dollar? And it's actually quite a lot, which is, of course, something a lot of exporters from Germany to France to many others will not like. So there's going to be a lot of pushback from different governments not to raise by 50 basis points. And so the prudent thing is to do 25 basis points in a regular fashion. Usual rate, of course, is very uncertain.
130 feels like a long way away. They've pushed it down, they've pushed it up. We'll see how high they can get it. Sebastian Galli, thank you very much indeed. Sebastian Galli, senior macro strategist, joining us from Nordea Asset Management. Coming up, we'll focus back on that energy story, but from a different angle. Martin Ratz, chief commodity strategist and head of European oil and gas research, joining us from Morgan Stanley. This is Bloomberg.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
So this is Bloomberg Surveillance, early edition. I'm Guy Johnson in London. Matt Miller and Kayleigh Lyons are both back in New York after Memorial Day. Let's talk about what is happening with crude. We came at it from the foreign exchange angle just a moment ago with Sebastian Galli. Oil heading for its longest run of monthly gains in more than a decade. The latest push higher comes as EU leaders agree to pursue a partial ban on Russian oil imports. Joining us now, Martin Ratz, Chief Commodity Strategist and Head of European Oil and Gas Research at Morgan Stanley. Martin, so we have a partial ban. Seaborne oil is going to be sanctioned, but we're going to see pipeline oil continuing. What impact is this going to have?
Yeah, the impact is quite meaningful. So there's a lot of focus, of course, on crude, and that's understandable. That's the bulk of Russian exports. But crude can ultimately be diverted away from Europe. It can go to Asian countries, for example, and we're already seeing some of that. Now, even that will have limitations to it. I would suspect that even for crude, Russia will find it difficult over time to find enough buyers. But the real sting, I would say, in this EU plan is diesel. The diesel market is extremely tight pretty much everywhere globally. Russia exports via the seaborne market about 1 million barrels a day of diesel. That is all seaborne, nothing through pipeline, and it pretty much all goes into Europe. And that is very hard to divert to other regions. So what this plan will probably mean is that 1 million barrel a day of flow from Russia into Europe of diesel will dry up. That will back up through the Russian refining system. Europe will still need to get its diesel somewhere else. It makes for a very tight diesel market. Diesel prices go up, and that lifts crude with it.
Seaborne oil, seaborne diesel can be sent elsewhere. Are we going to see that happening? What kind of a discount will that crude and diesel therefore have to tolerate out in Asia? I'm hearing pretty significant discounts are being applied at the moment. And what does that mean, that it then displaces other diesel that can come from elsewhere around the world? Is this just a shuffling of the deck chairs here, Martin, is really the question I'm asking.
Yeah, in crude, that can sort of partially happen. So Russian exports of crude via the seaborne market are in the order of 4.5 million barrels a day to make their way into Europe. The other 2.5 go somewhere else. And that has already shifted a bit. European imports are about down 500,000 barrels a day via the seaborne market. Asian imports are up about 500,000 barrels a day. So to an extent, that is already happening a bit. But it's worth noting that Russian ports do not take these very large crude carriers, VLCCs, the biggest oil tankers that can ship, 1.5 to 2 million barrels in one cargo. Russian ports don't take those type of vessels. They only take smaller Aframax vessels that can ship, say, 600 to 800,000 barrel cargoes. So if you want to fully revamp the trade patterns around the world, so to say, you need an awful lot of Aframaxes. And we're already seeing Aframax rates recently relatively high. That market is already tight. For diesel, I don't think that you can reroute these trade patterns all that easily. That's very difficult.
I mean, I have a lump in my throat when I think about the diesel issue, Martin. I want to get to a viewer question, a viewer writing in asking about the possibility of, if, and it is a big if, there's a resolution to Russia's war in Ukraine next month. How fast would oil and gas prices converge back to pre-conflict levels?
Well, that answer is perhaps a little bit more benign for natural gas prices. I would say that about a third or so of the TTF price at the moment you can trace back to a geopolitical risk premium. In the European natural gas market, the fundamentals are not such that you would suggest prices at these levels. You would need to explain the premium simply by a geopolitical risk premium, the risk that Russian natural gas into Europe would simply be cut off. But in oil, that is not the case. Oil is much more of a global story. It doesn't fully rely on the issue around Russian supplies. Sure, if the whole issue were to de-escalate, oil could soften a bit, and given the rally that we recently had, that can be quite meaningful. It can be $5, it can be $10 a barrel. But oil has fundamental underpinnings that I would say are strong enough to underpin quite high prices.
Right, supply was already tight going into the conflict in Ukraine, Martin. Given that there is fundamental reasons why oil prices are so elevated, what is your assessment about what that means for production and whether big oil majors, for example, are going to be ramping up capacity?
The oil majors will not be ramping up capacity. I think this is one of the most unusual phenomena of this upcycle. If this was any other upcycle, we would now see capex budgets in upstream oil and gas going higher. We would see upwards guidance in terms of production growth, and we're not seeing that at all amongst the majors. These companies have had their messages from their shareholders loud and clear. They are transitioning. They're maintaining production sort of for the time being with limited capex budgets, but they're focused increasingly on other things these days. So, you know, that creates tension in the oil market that needs to be resolved. And the way that's currently being resolved is via price.
Martin, thanks so much for joining us. Great to get your voice today. Hope to get you back on again soon. Martin Ratz there, Chief Commodity Strategist and Head of European Oil and Gas Research over at Morgan Stanley. Now, some people consider them commodities, others currencies. Some people think they're just digital Ponzi schemes, but we think cryptocurrencies are interesting no matter what you make of the long-term implications. Don't forget to watch Bloomberg Crypto today at 1 p.m. New York time. It's our weekly show. It covers the people, transactions, and the technology shaping the world of decentralized finance. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York. Guy Johnson is in London. And Tom Keene is, I believe he's back. Yes, it looks like he's back in his Surveillance OG studio. Tom, I know you've been on an epic trip to Switzerland and to London. Did you skip Europe completely?
No, you know, we did the rounds. We did Davos, very, very busy, spent a wonderful 12 hours, 18 hours in London and back home. And as you know, Matt, the inflation story today really paints a picture. And part of that inflation is oil. So let's look at a chart that goes way, way back. This is Saudi Light back to World War II with the Nixon deflation in oil. Then up we go with OPEC. And the headline here, Matt, is that where we are on inflation-adjusted oil priced in $2,022 is higher than we were at the peak in OPEC. We were higher in 2010, but on an inflation-adjusted basis, we've now exceeded the early 1980s.
It's going to be fascinating to see the impact that ultimately has, Tom, on the equity market going forward. We've seen that kind of rotation towards energy stocks. You've got Oppenheimer on a little bit later. Peter's going to be joining you from Goldman Sachs.
Well, it'll be about the sectors and really dovetailing in what energy will do and how the rest of the economies will react. Guy, the inflation numbers in your Europe were just stunning. I mean, way, way off the grid.
All right, yes, they were 8.1%. Pretty remarkable. Tom Keene, co-anchor of Bloomberg Surveillance. Looking forward to your conversations about that and much more over the next 3 hours. Thank you so much. Now, what else are we watching today? I will be watching the White House at 1:15 p.m. Eastern Time when President Biden is going to be meeting with none other than Fed Chairman Jerome Powell, as well as Treasury Secretary Janet Yellen. And guys, the White House official agenda for today says they're going to be discussing the state of the American and global economy and the president's top economic priority, addressing inflation. My question is, if the Fed acts to rein in inflation, if they continue with 50 basis point rate hikes, in theory, that is going to mean unemployment could move higher, the economy could slow down, perhaps even ultimately a recession within the next, say, 18 months here in the U.S. Is that really what President Biden is willing to face in order to get inflation down? Because as we know, this is going to be probably issue number one heading into the midterm elections, which are getting closer and closer coming up in November, Matt. And that's a big political problem for this U.S. president.
Yeah, it'll be interesting to see if they make the decision, you know what, we've already lost the midterm elections. Let's go ahead and eat a recession now to put ourselves in a better position for 2024. Maybe that's ridiculous. I'm going to ask Joe Matthew or someone else more informed than myself. I will be watching housing data today because we're going to get a slew of it out. FHFA home price index coming out at 9 o'clock. We're also going to get the S&P Core Logic. That's the Case-Shiller data coming out. So it's 20 different regions across the U.S. And we've seen, you know, outside of the U.S., in Canada, in London, in other places, the housing market that has been so red hot, I guess all of England or even the entire UK, Guy, has seen this kind of turn around. And I'm hoping to see, or I'm looking to see, if that's going to be the case in the U.S. as well.
We should all point out here that Matt just bought a house, so buying at the peak could be something that hurts a little bit.
Yeah.
Absolutely. If you want to feel better about yourself, though, Matt, I'm suggesting maybe going and seeing Top Gun Maverick. Could be a way to kind of lift your... I haven't seen it yet. You haven't seen it yet. Haley's got tickets, which I think are quite hard to come by. So, yeah, I think that'll be exciting. I wonder if the president's seen it. He always loves those aviator sunglasses. I hear those are back as well.
I wonder what car. I mean, obviously the planes are the focus, but I just
saw... I knew you'd go to the car.
I just saw what looked like a Ford Bronco. I wonder what car he drives in that film.
I'm surprised you're not going for the bike. I think the bike's the same one as last time. Anyway, that wraps things up. I'm sure a lot of people have already seen the movie. I know our producer's seen it twice. That's it for Early Edition. Surveillance is ahead. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Consumers are dipping into their savings, and that's what's sustaining the health of consumption in the US.
The consumer is really the most important data point here.
The Fed's not going to come to the rescue. There's no V-shaped recovery here.
The market has tightened a lot for them already, and they've only done one small 25 basis point rate hike and a 50.
I think the Fed is going to have to decide between two policy mistakes.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures down about 0.7%. TK, a hot one in New York City.
It is a hot one in New York City, and it is about utilities. And John, to me, it's just as much about utilities in Europe as well. What are those utility bills going to be given that inflation?
TK, that inflation data out of Germany yesterday, upside surprise. Spain, Italy, France, take your pick. For Europe, 8.1%, your headline number in the Eurozone, TK. Big meeting for the ECB next week.
A huge meeting for the ECB, and, obviously they've got to do something about this. And, over the weekend in the zeitgeist, and I think this was missed, John, very much, is Lagarde had some real strident language about enough. She had a blog out, and she basically said, enough, let's go.
Governor Waller said the same thing, Tom. Enough of the happy talk after we heard from President Bostic last week. Here's the quote, Lisa. I'm not taking 50 basis point hikes off the table until I see inflation coming down closer to our 2% target. That's the reality check from the Fed governor.
And all of a sudden, the narrative of last week, which is suddenly that perhaps the Fed isn't going to go as far or as fast as many people thought, just gets thrown out the window, right? People saying, well, maybe they do mean it. Maybe they do intend on continuing to go with even 50 basis point hikes until they get something under control as we get increasingly high inflation prints over in Europe, probably translating to something sustainable back here.
Bramo, last week was quite a week. Big week again.
Oh, was it, John? Tell us about Capri.
We can talk about that later,
quite a week?
TK. Okay. It wasn't Capri. It was walking through the countryside of the United Kingdom.
It's good to have you back, John.
At ease.
Yes.
Zen, as I always am. But more zen this time around.
No, last week was a big week because you did see a bit of a reprieve from 7 straight weeks of losses. All of a sudden, you see gains. How do we frame those gains going out? Are they simply a pause? Are they a bear market rally? Or are they something different, as you were talking about earlier, John?
I'm pretty sure TK's got more stories about last week than I have.
John, Velveeta fondue. That's my new recipe.
Is that right?
Try to make it up. Vet Bill would need it. Let me show you what this meeting's about today, John. I mean, the language here is hilarious. Here's the math. And this is just a recent article. Wage growth, 5.6%. Pretty snappy. John, inflation, 8.5%. I think that's negative wage growth. You think that has a little bit to do with this meeting today?
The Fed chair sitting down with Secretary Yellen, Lisa sitting down with Chairman Powell. What are we looking for from this going into payrolls on Friday?
I think just how unusual this is. This is the first meeting that Jay Powell has had with President Biden since November. Is this basically Jay Powell being given marching orders to go out there and to actually tackle inflation more aggressively? And how much does this compromise the independence of a Fed that already has been seen as very political? I think that that's really the tone here after a Memorial Day weekend when everybody was sort of shocked by the prices they were paying.
Driving season, it starts, TK, at what, $4.60 a gallon on average, and in some places much higher.
We're getting your $6 in some basic stuff. John, this language, I want to know if you'd ever see this language in the United Kingdom coming off the Prime Minister's desk. This was off the Treasury Secretary's desk this morning about the meeting that they're going to talk about. And the language of this is just really, really basic. I mean, this is American politics as it go. As we transition from an historic economic recovery to stable, steady growth that works for working families. How's that working, John?
It's not working out, Tom, and that's the problem for this White House. They are owning that CPI print every single month, TK. There's a hope in this market we might have seen that mechanical peak year over year. There's a fear in that White House, Lisa, that we haven't seen the worst of this just yet when it comes to confidence, consumers, and potentially the downdraft we're set to see in growth.
Yeah, and frankly, just based on how quickly it's rolling over, which is not, that's problematic. Even if it goes with a mechanical peak, if it doesn't come down materially, as most people don't expect it to, inflation is going to present a real problem at the midterms.
Should we get a market check?
Please.
Just squeeze one in. Futures negative 28 on the S&P. We're down about 0.7%, just about. Did you do the Dow a lot last week? I imagine you did.
We did the Dow a lot.
I bet you did. Yield time by 8 basis points on a 10-year.
7 out of 8 people in Happy Valley.
A lot of that down to Governor Waller. Your 10-year 281.88, and this quiet rally in crude, it continues, Lisa. Look at this, up 3.5%, a 119 on WTI.
Yeah, and frankly, over in Europe, a much bigger gain as we see touching the highest levels that we've seen, not on an intraday level, but really on a closing level going back to 2012 on Brent. Today, what I'm looking at, 9 a.m., we get a slew of housing data, including FHFA House Price Index and S&P CoreLogic 20 city housing data, which has been at the highest levels on record. Do we see a deceleration in the pace of price increases of homes, given the fact that mortgage rates are really crimping the volumes of sales? This is really a conundrum. If it's not bringing prices down, that we're seeing less dynamism in the market, what can the Fed actually do by raising rates all the more? Or do they have to just go that much more aggressively? 10 a.m., John, you were talking about how people are feeling. We get the Conference Board U.S. consumer confidence data. It has been trending lower, although I do find it interesting to see that there was a surprise to the upside yesterday, or I should say Friday, it feels like yesterday, on the University of Michigan sentiment survey. Economic surprises have been actually trending to the downside of the United States. How much does this indicate, frankly, a slowdown versus just people feeling bad about how quickly inflation is taking off? And at 1:15 p.m., we've been talking about this all morning. U.S. President Biden is meeting with Fed Chair Jerome Powell, as well as Secretary Treasury Janet Yellen, in the Oval Office to talk about how to make a more sustainable recovery. What were the words, Tom? For a working America. And how much can they really talk about the negativity of this when the unemployment rate is near historic lows, when you have wage increases? How do they then dovetail what their plan is when they don't have a lot of control, John, over anything right now when it comes to oil prices or when it comes to supply chain disruptions?
Ramo, thank you. Looking forward to that a little bit later this afternoon. Joining us now is Chris Marangi, the co-chief investment officer at Gabelli Funds. Chris, let's start here. The difference between a bear market rally and something more sustainable. How do you identify the difference between the two?
Well, a bear market rally means that we haven't ultimately hit the bottom for the market, but they're not necessarily all that ephemeral. They can be actually quite lasting and quite powerful. You know, if you look back to the period of the 2000 bear market, I'm not comparing this period necessarily to that one, but you had 6 bear market rallies. 3 of them were over 20%. And that's what makes them so painful for people who are not or don't remain invested.
Chris, I want to talk Gabelli 101, right back to Marangi and Gabelli and all that you've done, and that is the quality of free cash flow. Has the quality of free cash flow been disrupted?
Well, the quality of earnings perhaps has been over this latest bull market, but you know, cash is cash, and that's why we look at that metric primarily, because you can't fake it. And you know, cash flow has been constrained a bit by working capital in particular of late. And that's why we're paying attention to things like LIFO and FIFO, again, concepts that people in decades haven't looked at. But with inflation, it matters.
Chris, I saw you trying to recover from Tom's exclamation about FIFO and LIFO. I do want to get your sense of the margin pressures that we've seen and how that means, what that means in terms of what kind of momentum in earnings we can expect going forward.
Yeah, so, the story, we just came through earnings season for the first quarter, obviously. The story has been pretty much the same over the last year. Consumer is strong. Sales are being constrained by an inability to deliver products and services to the consumer because of shortage of goods or labor. And margins have held up reasonably well, but we are really seeing more and more pressure on margins. We saw it just, for example, in the food companies, amongst others, this last quarter. And it's getting, but companies are still able to pass costs through. But again, as we reach higher and higher price levels, that becomes more difficult.
Chris, what have we learned from some of the single-day price action on single names? Some single-name stories over the past few weeks, anywhere from Target to Netflix a few months ago, where you have these big misses, sometimes small misses that generate 10, 20, 25% moves on a single name, Chris. What have you learned from that?
We learned that you got to do the work. I mean, this is some of those misses and some of those stock reactions were companies that didn't have very much valuation support. They were highly speculative, but they're obviously, you mentioned Target and some of the retailers, real companies with real cash flow and real followings. So it's been surprising. It's, basically you've got to buckle up and be ready for the opportunities when they present themselves.
Great to catch up, Chris. As always, Chris Marenghi there of Gabelli Funds. Bramo, it's been difficult. Investors, the C-suite, corporate leadership, caught offside by a cycle that is moving so quickly over the last 18 months.
Yeah, but to your point, people were expecting margin compression. People were expecting sales to start to decline, or actually not sales, but just in terms of earnings. How much did they really see a surprise, and how much is it just sort of a reality check after a really frothy period? Just to put this into perspective, how much more can we expect given the fact that quantitative tightening, we've talked a lot about it. It starts Wednesday. It hasn't even started yet, John.
Have we fully seen the earnings reset? Never mind the QT, the rate hikes from the Federal Reserve. Have we fully realized that earnings reset, Lisa, that many people expected coming into this year?
Mike Wilson says no. Mike Wilson says that this is a bear market rally and that we have not yet seen the full reset. Other people agree with him, and then there's still others who are starting to see something more like a buy the dip moment, even if there is more downside over the next 12 months. So how do you sort of look at a time frame given how quickly the market is moving and the economy as well?
I'll catch up with Savita Subramaniam of Bank of America a little bit later this morning. She put out a list of questions she's being asked by clients, Tom. Here's one of them. When can I start buying tech? And she turned around, Tom, and said, when clients stop asking us that question, they still receive that question, Tom, all the time.
But I'm going to parse between profit and free cash flow driven tech and everything else. And the everything else has been pounded.
Well, Tom, something you said just about corporate leadership adjusting. For the previous year, that was about raising prices. And Tom, you've been looking for the cost cuts. Has that started yet? Is this just the beginning?
I'm getting whispers. I'm getting whispers. There's no question about it. Can I just say, John, in this first section with the three of us back, we've yet to talk about China. I think the gauze here of Shanghai relief and the calendar moving into the summer before the party Congress meetings is underplayed this morning.
It is a factor in the commodity market. Can I ask one question of both of you? First of all, what I saw was absolutely fantastic in Davos. Great job. I know how much work goes into that event for the whole team. Did anyone really talk about the fact that in the last 2 years, China is still being ignored to this extent, Tom? They still can't get in the country and find out what happened with the pandemic and the start of it.
This was somebody, who was it? Someone said when you peel back the onion of Davos, on the outside it's Ukraine, and on the inside it's China.
Folks,
it's all
this
China.
is why you watch and listen. Kishore Mahbubani was lights out, the giant of academic Singapore. And John, he teared up when he realized you weren't there.
I bet he did.
A lot
I bet he did. Peter Oppenheimer's happy I'm back. He's going to be joining us from Goldman at 7 a.m. Eastern Time. Futures down about 0.7 to 1%. From New York City, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. European Union leaders have paved the way for a sixth package of sanctions to punish Russia and President Vladimir Putin. They agreed to pursue a partial ban on Russian oil. It would forbid the purchase of crude and oil and petroleum products from Russia delivered by sea, but there would be a temporary exemption for pipeline crude that would satisfy Hungary, which gets Russian oil via pipeline. President Biden will hold a rare Oval Office meeting today with Federal Reserve Chair Jerome Powell. Treasury Secretary Janet Yellen will join them to discuss what the administration calls the president's top economic priority, inflation. Rising prices are hurting the president with voters just months before midterm elections. And for the first time since early March, the number of daily coronavirus cases in China has dropped below 100. Still, Omicron's contagiousness means the reprieve from infections and the tough COVID-0 response may only be temporary. Both Beijing and Shanghai have started to loosen restrictions on mobility. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze answer phrases or ask questions? What do you want to know today? Ask a question or visit SearchGo to find answers now.
Earnings season continues.
There's so much nervousness in the market right now.
This market punches you in the face.
Bloomberg is fastest with the numbers and analysis.
Big numbers from Disney.
It just slammed expectations.
Bloomberg, the fastest numbers and analysis you trust.
Council should now be able to finalize a ban on almost 90% of all Russian oil imports by the end of the year. This is an important step forward. The remaining 10% on these one, we will soon return to the issue.
A plan for a ban. Ursula von der Leyen, their European Commission president, doing what the Europeans do. They wait and they wait and they wait, Tom. Crude up 3.2% on WTI 118. Big move on Brent 123.81 through 120 in the last 24 hours again, and up by 1.76% this morning. WTI by more than 3%. Outside of that, yield higher by 8 basis points, 281.88 on a 10-year. You can thank Governor Waller for some of that. Equity futures down about 6 or 7 tenths of 1%. On the S&P, TK, we're down about 27 points.
Yeah, well, we're down, and, you know, it's a churn here right now, but I got to admit, John, with a stunning VIX at 25 level, coming back to 27.82 shows maybe a little bit of attention after the great celebration. What a day for the president. He's going to meet with the lads from Korea this afternoon. And, of course, he can look at the song Butter with Jungkook, Jimin, and V and go sidestep, right, left to my beat.
You need to translate
I like
right now.
He's talking
Rock
about
with me,
BTS.
baby.
I'm aware.
BTS. But before BTS, he's going to meet with the other lads, the lads from the Inflation Watch. Joe Matthew joins us here in Washington on Yellen and Powell and Biden.
Is she a lad?
Joe, help us here, please. What are they going to talk about?
Well, I can't imagine what's on the agenda today. I'm getting a real kick out of the attention this meeting is generating here, because, Tom, I'm pretty sure it's not for you. I don't think it's for Jonathan or Lisa either. And the point here is we're not going to be talking about 50 versus 75 basis points. We're coming off a long holiday weekend.
Right.
We're also coming off a week that we were obsessing over Uvalde. We were talking about everything except economic issues that this president needs to get his arms around. And I would say look no further than the front page of the Washington Post this morning. I don't know if you saw this story, but this is what normal people are reading. U.S. policymakers misjudged inflation threat until it was too late, complete with a timeline that goes back to February 21. This is not a news conference. This is not a briefing. They're going to be in the Oval. This is about optics. They're going to let the pool reporters come in. They'll ask a couple of questions. You'll see images of the three of them on the couches, and I'm sure the question shouted at the president here, maybe Jay Powell, is going to be, has inflation peaked? These are broad brushstrokes for people at home who are starting to tune into this.
But yeah, to tune into BTS and their great song Butter, sidestep right, left to my beat. What he's going to hear from Chairman Powell is it's my beat. Powell's in charge, right?
Yes. Yes, and Joe Biden will say that. I can only imagine, because of concerns about, well, wait a minute, is he telling the Fed what to do? The White House has been adamant that this is an independent Fed, and the president has even said himself, I'm not going to do what the prior president did, which is, of course, tweeting directions at the chair of the Federal Reserve. I'm not going to tell them what to do, not going to try to thumb the scale. But we also have to back off here. Great, there's a meeting. It's going to generate some photographs. But the Federal Reserve is in regular contact with the White House, with the administration. Jay Powell and Janet Yellen have a weekly breakfast, and members of the Fed meet with the National Council of Economic Advisors on a regular basis here. So the fact that they're sitting down in the Oval for the first time since November is a bit rare. It's noteworthy. This may not be the big news event that a lot of people are looking for.
So, Joe, are you basically saying that Tom's conflating the BTS meeting at 3 p.m. with the 1:15 p.m. With Jay Powell isn't problematic to you at all, because, frankly, they're both photo ops?
there's a lot to be said for that. And after the president's schedule that he held over the weekend, speaking at Arlington yesterday, Uvalde the day earlier, this is about hitting the reset button and reminding Americans that the White House is paying attention to gas prices and the issues that have them concerned at the kitchen table. This may not be a market mover for Tom Keene.
I mean, Joe, you're giving me, she's spending way too much time in the Beltway. Lisa, middle-class America is getting absolutely crushed by the quality and the character of this inflation.
And frankly, this meeting coming after Memorial Day weekend is not completely coincidental, considering the fact that whether people were driving or whether people were buying stuff for their barbecues, you definitely saw a material difference. Joe, perhaps this is just a photo op, but how much pressure does this raise for a Fed to be aggressive? Because it's quite clear they're going to be the blamed child here, that basically Joe Biden's going to point the finger at them no matter what happens.
Well, look, I don't think it raises the stakes here. Obviously, this is a Federal Reserve that's already leaning into inflation. But in terms of what middle America is worried about and talking about, I'm going to remind you again that while you guys were reporting on global Wall Street in Davos, America was mourning the loss of these kids in Uvalde. And it was a conversation here nationally that took everyone's eyes off every other story. This is the White House getting it back on track, following a long weekend, to your point, where people all had to tank up and they're wondering if they can afford a vacation this summer.
Joe, I mean, I'm making a joke about it with the lyrics of Butter, which I know you've memorized, Joe. I didn't really know the lyrics. Rachel had to help me out here. But I mean, Powell really, for Fed independence, is going to sidestep left to my beat. I mean, I can't say this enough. They're not going to sacrifice the independence of the Fed, even if Yellen's a tough guy in the room.
Well, so there you go. And that's, I think, what you'll hear from the president today. They're going to have a bit of a confab here, maybe a couple of questions, a couple of photographs. You'll see them walk maybe to the colonnade. But this is not going to be a new routine where the president's getting together to tell Jay Powell what to do with interest rates or to browbeat the Treasury Secretary somehow. They want to look like they're on the same page, getting together, fighting what the president has said is the biggest challenge here to Americans.
Joe Matthew, thank you. Looking forward to the show a little bit later. Sound on Bloomberg Radio, weekdays at 5 p.m. A segment called What Normal People Read, TK, that apparently we should be tuning into a little bit later.
It's an important article. Joe features, it's a zeitgeist this morning in Washington, but I do take your point, John, that this is about, and to be very honest, this is about elites who have a cushion against inflation and maybe the lowest of lowest decile doing better because the elites need the lowest of lowest deciles to service them, in a broad section in the middle with the Pew Research doing the best research on is flat out. The middle class, John, once again, early and often gets crushed given inflation.
And things could get worse. You saw the numbers out of JP Morgan, the investment bank, Brammer. We went through some of them in the last couple of weeks. They're saying we could have a cruel summer ahead when it comes to gas prices. We could have a 6 handle at some point in our future at the back end of the summer.
A lot of people seem to be thinking that is increasingly likely, and you can see it's sort of damned if you do, damned if you don't with respect to gas prices, because even if you do get some sort of resolution to say the lockdowns in China, a positive for growth, it's a negative for gas prices. If you see some sort of ban take place in Europe, that's going to be a negative in terms of the affordability of gas prices. All of these things kind of coming together at a time when it does seem like consumers are still spending, even as their incomes decline, which really presents a conundrum for the Fed, because they really want to actually cause people to spend that much less? I mean, do they want to really crimp demand? Is that the only tool in the face of commodity-led inflation?
Brammo, big question. Have you ever heard Biden, Powell, and Yellen described as the lads before?
The lads.
The lads.
I think I just did a couple of
like
minutes ago.
How do you think Secretary Yellen would feel about that, Tom?
The Beatles. I mean, Yellen would know it's about the Beatles.
Let's ask her. If she's listening, she can call in.
Anyway, futures down 6/10 on the S&P. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
From New York City this morning. Good morning. Here is your Tuesday morning price action. Futures are negative, down about 0.6% on the S&P. On the Nasdaq, down about 1/3%. Eating into some of the gains last week. Massive week of gains. First week of gains after a 7-week losing streak on the S&P 500. Some of that came from President Bostic of the Atlanta Fed teeing up a pause over at the Federal Reserve. Yesterday, Governor Waller pushing back against that, and you can see some of that in that bond market this morning. 2s, 10s and 30s look a little something like this. Yields higher across the board, up 8 basis points on a 10-year to 282.42, on a 2-year yield up by about 6 basis points to 254. Factor in the fact we've had some inflation surprises from Europe too, and a rally in this one, Brent and WTI. This has been a quiet one. I think Bank of America called it a sneaky rally. WTI 118.91, Brent crude 123.60. You remember back in early March through 130 briefly on WTI, Tom. We're creeping higher again, up by another 3 percentage points this morning.
John, I think it's important to understand you take the spot price right now and you compare it not to what people are doing on spot price months ago, but the moving averages. We've now exceeded a lot of the moving averages of March of this year.
Yeah, and we're looking at more gains ahead, potentially, Tom. And Bramo, you've been keen to point out less about what's happening in Europe, perhaps more about something Tom's been talking about for a while, China coming back online.
Shanghai loosening some of the requirements to ease up on some of the lockdowns. How much does this actually indicate a softening in zero COVID policies, even on a stealth level? How much is that really what's driving commodity prices? And how long, how many legs can that actually have?
TK is what you were looking for. Brent crude 123, WTI 118.
Worth watching there. And of course, what a joy in London to meet with Christian Malik and the JP Morgan team there. They were just spellbinding on their model of $100 steady state out to 120 to 150 a barrel. Now, on this meeting today at the White House, Lindsay Piegza, chief economist at Stifel. Lindsay, I did a log extrapolation of a moving average of a gallon of gas in America. On the basic AAA unleaded, we're going to hit $5 July 11th, which for Joe Biden might as well be tomorrow. What does Powell say to the president to afford Fed independence and also not upset the June meetings and beyond?
Well, I don't know if there's much that the Fed can really tell the White House at this point regarding their policy pathway. Chair Powell has been very clear that they're going to remain data dependent, but they are focused on inflation. So if we continue to see these inflation numbers remain elevated, they're going to continue along with their 50 basis point increases. More than anything, I think this meeting is about the White House and about President Biden being able to convince the American people that he is very much focused on inflation. And by having Powell come to the White House, by having this roundtable, he's giving that perception to the American people that he's focused, that he's putting pressure on the Fed to do whatever they need to do to rein in inflation. So it's giving the appearance of again, the White House being focused, but it's also giving that subtle indication of finger pointing at the Fed that it's been a monetary policy mistake and not a fiscal policy mistake.
Okay, but that's the look back. We got to look forward, and the look forward is simple. Is job formation breaking? Are you seeing tea leaves of a labor slowdown?
Not yet. We still saw a very strong April employment report, and we do expect to still see a very solid, very positive May employment report, as the unemployment rate remains well below what the Fed has told us is their full employment range, well below 4%. We aren't seeing the indications of sideline workers coming back online. We aren't seeing indications of those 11.5 million job vacancies slowly being filled. We're still seeing a record demand for labor, and the supply side is falling well short. So we're not yet at a point where we can say that tightness in the labor market is beginning to ease.
Have we even seen peak inflation on a mechanical level, Lindsay?
I think it's too early to call the peak level of inflation. I know the market is very anxious to call peak prices, but as we still are waiting for some of the earlier pressures, as these second, third, fourth round of lockdowns that occurred overseas, remember, it takes months for those to seep into the data. So we haven't yet felt the true and the full impact of those earlier policy responses filter down into the numbers. Now, yes, we are taking steps in the right direction. As you just mentioned, China does seem to be easing some of those protocols. So we could see some price relief as we move further into the second half of the year. But at this point, as we're awaiting some of that May data, we look to June, those earlier policy measures are still going to provide upward pressure on prices.
Lindsay, some people say it matters where the inflation comes from. If it's supply chain driven, if it's commodity driven, then perhaps the Fed won't go as hard to try to crimp demand because, frankly, they don't need to create a real problem for the labor market and for demand just to deal with something that largely is considered temporary. Do you think that that's changing? Do you think that that nuance has no place at this point?
No, I think the Fed is very aware of the fact that the vast majority of price pressures have stemmed from the supply side of the equation, rendering traditional policy metrics less effective. To your point, as the Fed raises the cost of capital, that can tap down consumption and tap down investment, but it does nothing to alleviate the price pressure stemming from these supply chain disruptions still lingering in the aftermath of the COVID-19 crisis, or those being exacerbated now by international conflict.
Not that they're going to play the parlor game in the Oval Office today, but what's your terminal rate now? Are you in a lower 3% band of where the Fed's heading, or do you go gloomy and show a restrictive Fed out above 4%?
I think the Fed is very aware that the U.S. economy is already showing signs of easing, that we're already seeing cracks in the armor. When we look at the consumer, yes, they're still spending, but why are they spending? How are they able to spend? They're now drawing down savings at a very market rate. And so going further into the second half of the year, where is that support coming from? It's likely to ease precipitously. So the Fed does have to acknowledge that. I think they are acknowledging that. And I think we move into 25 basis points sooner rather than later.
Okay, I guess that's something that President Biden wants to hear. What part of 7 or 8% inflation then is transitory? Do we go back to 5 or 4, or dare I say the nirvana of 2%?
Well, I think the Fed is very optimistic that they're going to see lower levels of inflation, but they're not forecasting 2% inflation anytime soon. For the Fed, it's about the directional momentum. And the Fed is optimistic that in the second half of the year, we'll continue to see a slower pace of price appreciation. So that second derivative decline coming into realized territory. But in 2023, that's where the Fed is very optimistic that we're going to see this precipitous downward trend in inflation towards 4%. Maybe even 3%, but getting to that 2% or below, that's going to take several years time before we get to that range.
The intention to get inflation down, Lindsay, is one reason why Mike Wilson of Morgan Stanley thinks that this is a bear market rally and that there's more downside, because frankly, anything that was a Fed put earlier is going in the opposite direction. The Fed actually wants to see a tightening in financial conditions and won't be happy if there's too much of a rally, if yields come in too much, because frankly, that moves in the opposite direction from what they're trying to achieve. Do you agree with that? Do you think that there is a sort of eye toward the markets and what that means for financial conditions by the Federal Reserve?
Well, remember, the Fed is very much focused on financial market stability. They're not targeting yields per se, but yes, they would like to see the market respond to what the Fed has already done. That being said, they have other tools in their tool belt to continue to push, especially longer rates higher. Drawing down the balance sheet, they're going to be ramping that up. If they're not comfortable accelerating the pace of rate increases, as we suggest, the economy is already slowing. 50 basis points may not be doable as we move into the fourth quarter or even later in the third quarter. They can resort to balance sheet reduction at a faster pace, which will provide nice upward pressure to the longer end, or at the very least, provide a floor to longer rates.
Lindsay, just quickly, if I'm in this market, I just want the answer to one question. Who do I listen to? President Bostic or Governor Waller?
I think at this point we need to listen to both, because what that tells us is that policymakers themselves, it is a very economist answer, absolutely. But I think this tells us that policymakers themselves are uncertain about the direction of rates, that there's a very fruitful debate going on among policy officials as to where the economy is going, where rates are going to go, and that's going to, I think, add volatility to this marketplace. So investors need to be aware that there could be some sort of change up, if you will, in terms of the policy pathway. It's not on a predetermined course.
Lindsay, thank you. Lindsay Piegza there of Stifel. Bramo, I don't think we've cleared that one up.
No, I think that's been really the toggle that you've seen in markets, as you pointed out, with last week, the really presiding sentiment being Raphael Bostic, and now suddenly Christopher Waller's coming out and taking the main frame. How much are they going to be able to go aggressively, given the concern about labor market and, frankly, the knee-jerk reaction within the Fed over the past 2 decades to go easy and not to necessarily go hard?
John, I think it's just an incredibly important meeting today. Thanks to John Plender over the FT for reminding me of his classic photo. This is a tennis player, Alan Greenspan, in an Oval Office type meeting. I mean, John, I could see this today at the White House.
You think Chairman Powell lying down in the Oval Office, Tom?
Yeah, Powell lined up. Maybe Yellen will take a nap as well. This is Vice President Cheney. For those of you on radio, this is a classic photo of the tennis player Alan Greenspan working his back. He had a terrible back, I guess. So
TK, a difficult moment for this White House. And as Joe mentioned about 5, 10, 15 minutes ago, it's about the optics, isn't it? We're doing something about it. Maybe don't look at us, look at them.
It's about the optics, yes, but much more, it's this huge, once-in-a-lifetime crisis that we've had 3 times in 15 years, the great financial crash we had the pandemic, and now we've got a war in Ukraine linked into the China lockdown.
And some leadership all over the place, not just in the public sector, the private sector too. We've seen it from company to company, from industry to industry. They are struggling to judge where they need to be 6 months, 12 months out for the demand that exists at that point.
The uncertainty is off the chart, and someone very good at this will be the Secretary of Treasury, Janet Yellen. She's expert on modeling out the language of uncertainty to our president.
Futures right now down about 17 on the S&P. We're negative 0.4% on the NASDAQ 100, down about a tenth.
Dow futures down 134.
I bet you had a good time last week with that, didn't you? Yeah, a lot of fun.
Brian Moynihan wanted your Dow futures.
Did Brian actually want that? Did you ask?
Hello, traders. How are you doing today? Are you ready to trade? I'm looking to trade Bitcoin, and the price I want to sell short, 31,671. So it's quite close to the actual price. So if you're looking to trade Bitcoin, please place your order to sell at 31,671. Okay. As soon as it will get filled, I'll speak to you and I'll tell you what we're going to do and how we're going to trade Bitcoin. Okay, guys, I'll speak to you later.
Russian oil delivered by pipeline. That exemption is needed to get Hungary to sign on. Inflation in the Eurozone accelerated to an all-time high this month. Consumer prices rose a more than expected 8.1% from a year ago. Food and energy were the big reasons. The data will intensify the debate at the European Central Bank about how fast to raise interest rates. And President Biden says there are limits to what he can do about guns. Over the weekend, the president visited the Texas elementary school where 19 children and 2 teachers were killed. He has renewed calls for Congress to crack down on the kinds of assault weapons that were used to carry out the killings. And more legal headaches For Deutsche Bank, police in Frankfurt raided Germany's largest lender and its asset management unit, DWS. The search is related to accusations of so-called greenwashing by the asset manager. There have been claims that DWS was marketing investment products as being greener than they actually were. American investor Todd Boehly has completed his $5.4 billion takeover of Chelsea Football Club. That ends almost 2 decades of ownership under Russian billionaire Roman Abramovich. He was forced to put the team up for sale earlier this year, shortly before being sanctioned as part of the response to Russia's war in Ukraine. Global news 24 hours a day, on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
Okay, guys, as you can see, position opened on Bitcoin. That's a short position at 31,000. 31,671. Okay, what we're going to do, we're going to see how far it will go in our favor. With Bitcoin, how it works, 1% give us profit £1,000. So if it will move down to 1% down, we will place stop loss on at 0.5%, and then it will move. We will move in our advantage gradually to better position. Okay, guys. If you want to get the strategy, you need to go to company.co.uk. And you can get the strategy from there, or if you want to register for webinar, you're welcome. You can register for webinar, and I will tell you, I will explain everything, how the strategy works and how to trade Bitcoin, Forex, any derivatives you like. Okay? I'll speak to you later, guys. Stay safe.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It should be a full energy embargo, oil, coal and gas.
We, before the war, were about 90% Russian gas dependent. We are no longer buying any gas from Russia. I also don't see the point of talking with someone who's committing genocide in a neighboring country.
That was Latvia's Prime Minister speaking to Bloomberg's Maria Tadeo. We'll catch up with Maria a little bit later in the next hour. Futures this morning on the S&P look like this, negative 0.4%. On the Nasdaq, down about 0.1%. Some of that crude conversation, 118.73 on WTI, up by more than 3%. Wow. Brent crude, a tidy move through 120. Yield higher by 8 basis points on a 10-year, in and around 282. You can thank Governor Waller for some of that move higher. Thank Europe for some of it too. Just upside surprise after upside surprise in the Eurozone on inflation. Euro dollar 107.30, that currency pair negative about 0.5%, Tom. The big one next Thursday for President Lagarde.
Well, it's going to be next Thursday for Lagarde, but also the economic data this weekend of the jobs report is not going to be a small idea. John, quickly here, tomorrow, June 1, those first month data that we get, what are you looking for?
I'm looking ahead to payrolls, Tom, and looking for some deceleration in payrolls growth, because that's what a lot of people are looking for. The JOLTS data, that's going to be a focus for some, Tom, but that JOLTS data is really, really dated. Yeah. So if you're looking for job openings to confirm a move over at the Federal Reserve, then that Fed is going to commit to being a little bit late.
And the housing data today is dated as well. That's in this fast-moving 2022 important. It is a joy, and it was my book of the summer a few years ago. Stavridis and Ackerman way out front on the tensions with China, looking out to 2034. Now it is vintage Stavridis, and he joins us this morning, the Admiral, with To Risk It All. And this is what he does best. This is 8, 9, 10 chapters, 9 conflicts, 9 chapters on people in the Navy and lessons learned of their successes and their failures. I want to fold this, Admiral, into where we are right now. And this is off my conversation in Davos with Sir Lawrence Friedman as well on the Black Sea. You were first, I heard, on the Black Sea. William Halsey was out of Pearl Harbor in 1941. He came back. He supported Nimitz. He supported the Navy under a lot of heat. And then he went out to sea aggressively. How do we be aggressive in a Black Sea contained by the Bosphorus Strait?
The Black Sea is a Russian lake right now. Their Black Sea fleet controls it. But here's the good news, Tom. There are NATO allies around that Black Sea, including Turkey, Romania, Bulgaria. We have NATO warships in the area. The United States can flow warships that are currently stationed in the Mediterranean Sea. I think we need to look to the sea because of grain, because of agrarian products bottled up in Ukraine. At some point, the international community, I believe, is going to have to consider escorting grain tankers in and out of Odessa. Right now, they're choked off. That's going to lead to maximal impact in North Africa. We need to open the seas to Ukraine. I think that's the next big muscle movement in this war.
Are we measuring risk correctly? Let's look at Admiral Halsey in your book and the idea that he got a lot of things right and he had a most difficult 1944 in the Philippines. We're worried about failure like Admiral Halsey faced failure. Are we overemphasizing failure?
I think we are not. And let's take it to Ukraine, where you see 2 risk takers, right? You see Vladimir Putin, who has really rolled the dice in a very big way. And I don't think it's going to come out well for him because he has no moral grounding. On the other side of the coin, to your question, Tom, you see someone like Zelensky, who literally is risking it all, his family, his parents, his civilization, his cities. That's pretty motivating. And I think at the end of the day, with the tools the West are providing him, his risk calculus is going to be the correct one.
Okay, so Admiral, if Vladimir Putin is an example of failed leadership, why aren't they losing more quickly?
Well, they are losing very quickly as follows, Lisa. You'll recall 3 months ago, every prediction was that they were going to sweep across the country, conquer Kyiv, decapitate the Zelensky regime. None of that happened. Plan A, total failure. So now they're back to Plan B, which is a much more modest approach in the southeast of the country. and they're doing better by comparison with their failures at the beginning. But I wouldn't categorize what I'm seeing right now as a lot of success on the Russian side.
So then it brings us back to the Black Sea and your idea of possibly escorting grain ships from Odessa. How aggressive should the Western allies get in the face of dramatically weakened leadership by Vladimir Putin? Is it time to be more aggressive, or is it just to continue this sort of grinding it out kind of approach that we've been seeing for the past couple of months?
Yeah, the mistake here is to think that it's some kind of on and off switch, that either we go to war with Russia or we just sit back and let them conquer Ukraine. I think the West has correctly treated it like a rheostat, like the dimmer in your dining room, and is cranking it up, taking more risk, back to the conversation I just had with Tom, taking more risk in prudent ways. And I think in that case, when I look at the grain shipment, it's time to take a look at that.
Stavridis, what can anyone from England learn from the power of no and John Paul Jones? This is a few years ago, and Mr. Jones went over to England and took on Britain. What do we learn about the power of no?
In one word, determination. And here you have a relatively ragtag American Navy in the 1770s. And John Paul Jones inspires it by fighting from the deck of the Bonhomme Richard and defeating a British ship, the Serapis, in 1779. It's an extraordinary story in which he utters the immortal words, immortal to the Navy, and I would argue to anybody, I have not yet begun to fight, even when looking defeat in the eye.
Well, Pharaoh says that once a week.
I was wondering where you were taking this, Tom, as you set up that conversation. Admiral, thank you. Admiral James Stavridis there of the Carlyle Group, thank you very much. TK, opening the sea, you've been talking about it from the very beginning of this conflict.
I'm sorry, this goes back to a cold winter 20 plus years ago, John, in, of all places, Amherst, Massachusetts, and I read everything I could on Russia history. They always look south. They always look, in every circumstance, to the Black Sea.
And Tom, food and energy
every time.
At the heart of some of this conversation.
Well, it is, and that hasn't moved today. I mean, on the daily basis, I really don't see wheat popping yet or corn. They've actually done a little better recently. But I'll tell you, John, seriously, in Davos, every conversation circled back to Odessa. It doesn't matter if you spell it with one S or two S's. That is the focal point right now in terms of the food, the food and the Arab Spring memories of Tunisia. I'm sorry, Odessa is the fulcrum point right now.
Peter Oppenheimer is going to be joining us shortly from Goldman Sachs on this equity market. Stay tuned for that. Here's your setup in the equity market right now. Futures are negative on the S&P 500, down 17 or 18 points. We're down 0.4%. I'm sure many of you saw the comments from Governor Waller yesterday of the Federal Reserve, talking up higher interest rates until inflation starts to get closer to 2%. That unleashed a little bit of a sell-off in the Treasury market. Yields higher by 7 or 8 basis points to 281.33. Over in Europe, more upside surprises, just the wrong kind of upside surprises. Inflation heading in the wrong direction still. Euro-dollar negative 0.7%. From New York City, this is Bloomberg.
Almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, But many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu, sama aja. Belum ada turis ke Bali, masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Consumers are dipping into their savings, and that's what's sustaining the health of consumption in the US.
The consumer is really the most important data point here.
The Fed's not going to come to the rescue. There's no V-shaped recovery here.
The market has tightened a lot for them already, and they've only done one small 25 basis point rate hike and a 50.
I think the Fed is going to have to decide between two policy mistakes.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From a steamy New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures negative on the S&P by 0.4%. TK, big day ahead. Big week ahead too.
Yeah, big week ahead up to the jobs report here. We're getting some June data out tomorrow. And what does it matter? And as you mentioned in the last hour, John, the changes now are so abrupt. The data really doesn't matter. I'm really not going to matter about Case-Shiller, et cetera. What I want to know is the pulse right now. And you know, in the Oval Office this morning, that's what the president's going to ask of the chairman.
Inflation, nothing else matters right now. And it's not just in America, it's Europe too. We talked about it earlier this morning. The numbers out of Germany, out of Italy, out of France, out of Spain, out of Europe, the Eurozone, an 8 handle. Tom, an 8 handle in the Eurozone.
Yeah, J.P. Morgan, I've been reading their 100-page opus, maybe the research piece of the year from Christian Malik and the team. And John, GDP of hydrocarbons is about 9% globally. So every time you see that oil price tick up, it permeates throughout the system.
Bramo, driving season starting in America. Crude 118 on WTI. Gas prices, they keep climbing the wrong way for this White House.
Yeah, to new record highs, and a lot of people are trying to frame out a $6 a gallon of gas. We're already seeing that and beyond in certain areas in the United States. What does this do to the buying power, to the willingness of American consumers to absorb higher prices? Because right now, the CEOs that we spoke to last week, and frankly, even the business owners that I speak to casually day to day, say that there really is no limit to how much they can hike up prices, and that's a bad thing for the Fed.
They can't get a read on this economy, though. let's be clear about that. We've seen it from company to company across industries that they're struggling to gauge where we are in this cycle. They've set up their companies for where we were 12 months ago. We're not there anymore. We saw that at Target, we saw that at Walmart, we saw that across the retailers, from being understaffed to overstaffed, and they were clamoring for supply, Lisa, and maybe in some places they've got too much of it now.
And this is the reason why you asked a really good question about what it means to see massive price swings in some of these shares after a downside surprises and margin pressures appearing on their earnings statements. How much are we starting to see them actually gauge out a more optimistic future than the reality? We saw the opposite of that for so many years. Are we starting to see now the CEOs unable to get out ahead of just how much they're going to have to pay workers and just how much the commodity costs are going to bite on their operational expenses?
Without a doubt, across a whole range of issues. Tom, can they provide any guidance now whatsoever?
Absolutely not. And, you know, the guest we have coming up here to lead off, please stay with us for Peter Oppenheimer. But, John, I'm going to suggest it goes right to the revenue line, which is the unit dynamics and the price dynamics in this high inflation environment. And as Chris Crisanti mentioned earlier, Chris Morangi, rather, with Gabelli mentioned, when was the last time we talked about LIFO, FIFO inventory? We're in a new era, which harkens back to an old era. And again, the president knows that old era.
That president has a key meeting a little bit later this afternoon. We'll get to the details of that a little bit later. Let's get you up to speed on what's happening with the price action as Wall Street gets back to work this Tuesday morning. Good morning to you. Futures negative a third of 1% on the S&P, on the Nasdaq 100. Pretty flat right now. Considering what we're seeing in the bond market, may be surprising somewhat. Yields higher by 7 or 8 basis points on a 10-year, 281.33. Last week, Bramo, it was President Bostic saying maybe we have a pause later after the summer, and Governor Waller having none of it yesterday afternoon.
Frankly, looking at the inflation data, and just to give you a sense of that, we saw mortgage levels come down, mortgage rates come down last week, the most going back to 2020. And yet we are continuing to see the price pressure go to the upside. We're going to get the latest read on that at 9 a.m. with a slew of housing data, including the FHFA, as well as S&P CoreLogic house price data. Year over year, we have seen record increases in housing prices, despite mortgage rates that are increasing, despite all-in costs that are creating a real prohibitive environment for a lot of potential clients. A very concerning mix. Meanwhile, we are going to get at 10 a.m. a read on consumer confidence. We get the Conference Board U.S. consumer confidence data. How much do we see an ongoing decline in how much the American public has in terms of optimism as we continue to get downside surprise on the economic data after downside surprise? And at 1:15 p.m., U.S. President Biden is meeting with Fed Chair Jerome Powell, as well as Treasury Secretary Janet Yellen on inflation. How much can they talk about bringing up the unemployment rate? This is the unpopular reality of rate hikes. How much does this actually end up with more people unemployed or a worse hiring environment? John, that seems like the only potential outcome. How do you dovetail that message if you're the leader of what a lot of people think to be the free world?
As Tom said repeatedly through the morning, the lads getting together in the Oval a little bit. I'm still getting my head around that. In the Oval Office a little bit later, Lisa.
Yeah, and honestly, I do wonder whether this is just a photo op or whether this actually creates... I actually would agree, because if it's a photo op, it actually creates a liability for a Federal Reserve that's facing off with accusations of being overly political, of being behind the ball. Right. How does this get positioned, into a kumbaya moment?
There's no kumbaya. 30-second history. Truman and McChesney Martin invented the modern Fed, I'm going to guess 1951. John, flash forward to the same inflation worries of Vietnam War, LBJ, and again, McChesney Martin, pressured, and then you go over once, twice, Nixon and the rest. This is a reoccurring theme, and Powell's got to stand his ground, and frankly, he's working with a president who's gracious and will let him do that.
Without a doubt, Tom, this administration has blamed everything under the sun. Price gouging, supply chains, Putin, Russia, take your pick.
AC Milan.
Not Milan, but none of it sticks, Tom. None of it sticks, and you've seen what it says in the polls. That's how people feel about this White House when it comes to this issue.
Now, let's get to our guest, John, but this inflation is entrenched, and we saw that this morning in Europe.
Joining us now is Peter Oppenheimer, Chief Global Equity Strategist at Goldman Sachs. And Peter, you put out the note yesterday, so let's start with your research. What happens after you've seen peak inflation? So work through it with us. Have we seen that? What happens next?
Well, I think that if you look at the history for markets, at least, when you get peak inflation, you do tend to get a recovery in risk assets. And that's generally because it starts to alleviate pressures on interest rates. By that stage, You've usually had markets already pricing in an economic downturn. So at the point where people think that things are bad but getting less bad, you tend to get a recovery. But it's important to say that there are variations around this theme. After all, when inflation peaked in 2001, markets were still falling because of the fallout from the tech bubble. And similarly, that was true around the financial crisis. So I think we've got to be a little bit circumspect about this. Generally, I think if inflation peaks, it will provide some relief, but there's still the ongoing uncertainty about the scale of the slowdown in growth. And until we get more evidence that the rate of deterioration there is slowing, I think markets will be a bit volatile in the short run.
Peter, paint a picture of how corporations adapt, not sector to sector, but as a general statement giving new, almost jump condition move in inflation. How do corporations adapt and adjust?
Well, I think there are two things that are important to say. One of them is that, inflation is generating higher nominal GDP. In a sense, growth is not the problem. To your point earlier, Tom, the problem is margins and bottom line. Equities, companies are making a claim on nominal GDP growth. Nominal GDP is actually quite high relative to the last decade. The question is how they can cope with higher costs, what that does to margins, what that does to earnings in the bottom line and their valuation. I think the second point to mention is that we're in an environment now which is very different to the one we've seen in the last couple of decades, when both commodities and labor were easily available and relatively cheap. And now we're in an environment, probably structurally, where both commodities are becoming more scarce, more heavily contested and competed for, more expensive, and labor as well. I think what that will do is encourage more companies to invest in greater efficiency, like we saw in the 70s, more spending on innovations to become more energy efficient and substituting, to some extent, technology for labor as well.
Peter, how does this all play into being overweight both equities and cash, which doesn't seem to make sense, given the fact that you see bonds as actually being the biggest underperformers here?
Yeah, I mean, in a short-term horizon, we're actually neutral of equities, overweight for cash and commodities. On a 12-month view, we are actually overweight of equities. And I think it's important to emphasize that relative to bonds, there's still some reasonable return, I think, to be got in equities over a 12-month horizon. First of all, valuations have come down a lot. Actually, profits have held up so far very, very well. If you look at most equity markets, they're trading now below long-run average valuations. That's true across Europe and across Asia and EM. Not true in the US. The US is still trading above its long-run average valuations. But I think there are some, attractive valuations that are coming through. Earnings, we think, will grow with stronger nominal GDP, albeit at a slower rate. The problem is valuation, because obviously with higher inflation, higher interest rates, you're not seeing the valuation expansion that investors got used to in the last cycle. So I think taking those things together, on a 12-month view, we think there's some good opportunities in equities now.
Peter, wonderful to catch up, and congrats to your Tottenham for a top four finish. I know you wanted me to squeeze that in there somewhere. Thank you, buddy. Peter Oppenheimer there of Goldman Sachs. Thank you. TK, tough moment. I've said that repeatedly through this morning. This is a really tough moment.
It is, and it's the character of the inflation. And again, I'm going to go back, John, to yes, there's inflation in certain ideas, but to me, it really centers on oil and gas and on hydrocarbons, on the distillates, and how it filters through the system. And how do you work that away? I mean, remember transitory, John?
Oh, yeah.
90 days, it's all over.
Do you remember that, Tom? That drinking game that we used to play on this show?
Yeah.
No one talking about it anymore.
John, the Tang in Switzerland just
what was that like?
It's not the same.
Was it spiked Tang? That's what we want to know.
No, but it's not the same.
I saw that video going round of you, looking absolutely disgusted, appalled, in fact, by whatever you were drinking. What was that?
It was a Kirsch. I think it's called a Kirsch. It's like pears and plums.
People want to know, Tom, did someone water down your scotch?
No, it was not
what
scotch.
Happened?
No, we don't allow that on set.
Of course not, never. Of course not. Futures down 0.2 on the S&P from New York City. Great to be back in the seat with the team. This is Bloomberg.
Of course.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. European Union leaders have paved the way for a sixth package of sanctions to punish Russia. And President Vladimir Putin, they agreed to pursue a partial ban on Russian oil. It would forbid the purchase of crude oil and petroleum products from Russia delivered by sea, but there would be a temporary exemption for pipeline crude that would satisfy Hungary, which gets Russian oil via pipeline. President Biden will hold a rare Oval Office meeting today with Federal Reserve Chair Jerome Powell. Treasury Secretary Janet Yellen will join them to discuss what the administration calls the president's top economic priority, inflation. Rising prices are hurting the president, with voters just months before midterm elections. And for the first time since early March, the number of daily coronavirus cases in China has dropped below 100. Still, Omicron's contagiousness means the reprieve from infections and the tough COVID-0 response may only be temporary. Both Beijing and Shanghai have started to loosen restrictions on mobility. Hurricane Agatha hit Mexico's Pacific coast with high winds and heavy rain. It's expected to be the strongest May storm ever to strike the eastern Pacific. Agatha was rated just below Category 3 on a 5-step scale. There's concern that even if the hurricane loses strength over land, remnants could cross into the Gulf of Mexico and form a new storm there. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.